Hello. Good morning, everyone.
Good morning, sir.
Good morning, sir.
Good morning, sir.
So, did you revise what we learned yesterday? How much did we learn yesterday?
One ton.
So, did we get a ton of information? So, how much information are we gonna get today?
+1.
So, test will be held by tomorrow end. So, prepare accordingly for tax audit entirely. Till now, everyone is comfortable up till 20, clause number 20. Yeah,
Yes, sir.
we'll again try to revise once. Um, We'll just start right away with clause 21 first, and later on, after we complete the clauses, we'll try to revise first. So, till clause 20, we were trying to assess all the deductions that we were able to make in our profit and loss account. That is, here also we were amount which is admissible under section, these all sections, right? And then again, clause 20, we have to tell what the amount which is inadmissible as bonus in clause 20, which is inadmissible as bonus to employee, that is which is otherwise payable to employee as profit or dividend. And here all the contributions which we have received from employee, that is here we have to state what employee contribution of pf, esic and everything. So till clause 20 we were dealing with what all the deductions. Now in clause 21 we'll be dealing with any disallowances that we need to make, any disallowances that we need to make. Are you able to see my screen? I think it's got frozen. So we'll start with what now? Clause number 21, right? So in clause 21, I told you what all the disallowances that we do in PGBP that we have to deal with here. So please furnish the details of amount which is we have debited to profit and loss account, but which will not be allowed in computation of your income, the expense which will not be allowed in the computation of your income. For example, expenses which are in the nature of capital nature of expenses, or expenses which are personal nature of expenses, and advertisement expenditure. Do you remember this section, section 37 1b, something related, section 37 1b or 2b, which deals with what political newspaper, and you are sort of advertising in your political newspaper, thereby contributing to the political parties. So that was disallowed under this section. And there were many other disallowances also under section 37, as far as I remember. Do you remember section 37, all the disallowances that were mentioned in section 37? Personal nature of expense, capital nature of expense. So these all expenses, if at all it has been debited to profit and loss account, if it is debited to profit and loss account, then you have to specifically mention here the expenses, those which are debited in profit and loss account. So capital nature of expenses, personal nature, advertisement expenditure in any souvenir, brochure, tract, pamphlet or the like published by a political party. If you are doing this in a normal newspaper, then it's fine, then it is allowed. But if you are doing this in a brochure or souvenir which is published by a political party, then that is treated as good as political contribution, and that is this therefore not allowed as a expense under the head PGBP. And then expenditure incurred at all the clubs, being entrance fee or subscription you are paying for any of your employees, or any of your events. And then expenditure incurred at clubs being cost for club service and facilities used, these were also disallowed. Expenditure by way of penalty or fine for violation of any law for the time being in force, expenditure by way of any other penalty or fine for not covered above, and expenditure incurred for any purpose which is an offense or which is prohibited by law. So I remember I told you yesterday that in the case of any item, in the case of any item which is repeated twice in our tax audit report, then we have to kind of tally both items, that whether they are reported accordingly or not. Then something which I told you was interest on TDS. Interest on TDS is reported under clause 34, clause subclause C. that is due date of interest, interest on TDS, and how much amount of interest on TDS you have actually paid, and actual date of payment, that will have to report in clause 34C. And the same we can also report here, because I told you what, this expense is not allowed, this expense is not allowed under PGBP, as this is kind of a penal nature, penal in nature, expense which is penal in nature. So you can also highlight this here, if at all it is debited to profit and loss account, right? And then in yeah, first of all, in clause number 21, this is very important clause, which of course is being asked since last two attempts also, and I have been telling to students as well that clause 21 is very important. In this attempt also I told clause 21 and the question came. This attempt also this will be important, because there are so many sub clauses also, and in one of the MCQ of ICI they've also asked sub clauses. Sub clauses in the sense, clause 21 subclause A or clause 21 subclause B. What is the, with respect to the options, they have also confused with respect to sub clauses. So we have to learn also the sub clauses in this clause number 21. What is clause A? Subclause A: expenditure with respect to capital nature expense, personal nature expense, advertisement in nature of brochure template in political parties, newspaper, and then all the nature of expenses which relates to cost of club subscriptions, or by way of nature of any penal nature of expense, or any offense or violation of any law, right? All these expenses will be clubbing under subclause A. Then subclause B is very simple, which relates to section 40 clause A. So do you remember this section 40 clause A? I told you yesterday also, 40 A I and 40 A I A. Do you remember these two sections, which is very important in your PGBP sections as well, with respect to expenses on which TDS has not been deducted, expenses on which TDS has not been deducted, or deducted but not paid to the government. So expenses in which TDS has not been deducted, in the case of non-resident, expense to non-resident, expense to non-resident on which TDS has not been deducted or deducted but not paid, this entire expense will be disallowed, correct? We will have to add back in our computation of income. Similarly, for resident expenses which is being paid to resident of India, those expenses, if TDS has not been done or done but not paid to the government, then 30% of the expense will be disallowed. 30% of expense will be disallowed. So here also, with respect to section 40 clause A, first 21B and then 1, 21B and then 1 will deal with what, as payment to non-resident, referred to in subclause I, 40AI. 40AI. First of all, first one, 40AI. It's sequential only. First is 40AI, and then we'll come with 40AIA. 40AIA. So 40AI will have to disclose what all things. So first of all, we'll disclose payment on which tax is not deducted. I told you what, either deducted but not paid to the government, then also the expense will be disallowed, or if at all it is deducted, not only, then also expense will be disallowed. So first of all the details of the expenses on which tax was ought to be deducted but not deducted. Right. So first of all, we'll write date of payment, amount of payment, nature of payment, and name of the addressee. So to give an example, suppose we did payment today, 28th May. So we had to deduct the TDS by 7th of next. We have to pay it to the government to by 7th of next and deduct by end. And then amount of payment, suppose 1% TDS on whatever amount of payment in, as in expense. This is expense amount. This is expense amount. Suppose you are paying for annual maintenance charges. So annual maintenance charges 194C, 1% ought to be deducted. So amount of AMC you will have to specify here. Then nature of payment you will specify. This with respect to deals with contracts or 194C, and name and address of the pay. Then again here in B, what we will write, details of payment on which tax has been deducted but not paid to the government during the previous year or in the subsequent year before the expiry of the time prescribed under section 200 subsection 1. So here also date of payment, amount of payment, nature of payment, name and address of the payee, and out of these amount of payment, suppose you are paying for 10 lakhs, then 1% ought to have been deducted, which is equal to 10,000. So amount of tax deducted also you have to specify. correct? Similarly, IA was what? IA is with respect to expense to resident of India on which tax was done on and not paid to the government, or tax is already not deducted. Then details of payment on which tax is not deducted, you will have to specify here the same, and payment on which tax deducted but not paid to the government, you will have to specify these details. Now IC 2A, 2B, 3, these were all the other sections which we used to kind of ignore, so that is not much relevant here also. But yeah, I'll normally speak about 40A3 because there was a slight difference in this section which specified that expense to NR, which deals with salary only, salary paid to NR, on which tax is not deducted, on which tax is not deducted. Here it doesn't specify the tax deducted but not paid to the government. So in one of the case law of Delhi High Court also, this was specified that if tax you have deducted and if not paid to the government, then the expense will be allowed. Expense will be allowed because the language says what? Language says salary on which tax is not deducted, expense will be disallowed. Salary to non-resident on which tax is not deducted, then the expense will be disallowed. But it doesn't specify that tax deducted but not paid to the government. That is the only difference in 40A3. 40A3 deals with what? Salary to non-resident. So here also you'll have to specify date of payment, amount of payment, name and address of the payee. Then 40 clause 4, 40A5. 40A5 is also sort of somewhat important, which deals with, do you remember section 1010 CC of Income Tax Act? 1010 CC of Income Tax Act deals with tax paid on non-monetary perquisites, in kind perquisites, that is whatever perquisites you are receiving in kind, the tax paid on that by the employer is exempt in the hands of employee, under section 1010 CC. And since it is exempt in the hands of employee, therefore this expense will not be allowed to employer as a deduction. Since they are not charging the income in the hands of employee, why will they allow this expense to be deducted from employer? So this 1010 CC is what? Tax paid on perquisites in kind or non-monetary perquisites. So this tax paid on perquisites in kind, this is disallowed under section 40A5. Disallowed under section 40A5. That is what this section had to say about 40 small a5. Tax paid on non-monetary perquisites will be disallowed under section 40A5 since it is exempt under the head salary to the employee under section 1010 CC. Clear? So are we clear with 21A, 21B, and under 21B we dealt with what? 1, 2, 3, 4, 5, 6, 7, 8. Under 21B also we dealt with a lot of sub clauses. So 21 clauses, 21 clause A, 21 clause B, and then we'll start now with 21 clause C, which is also important clause because this deals with salary remuneration paid to partner. So interest, salary, bonus, commission or remuneration which is not allowed under section 40B or 40BA and computation thereof. So do you remember how much interest is allowed under Income Tax Act if interest is being paid to partner?
12% each.
12%, sir.
So 12% or whatever it is specified in the agreement, whichever is lower, right? So agreement, whatever it is specified, or maximum 12%, right? Similarly, salary, bonus, commission, remuneration, all clubbed together will be assessed separately with the limit. Do you remember the limit? For first 3
First
lakhs,
3 lakhs,
60%
90
or
percentage of
yeah,
90
90
percentage of profit.
90%
or
Remaining
or
60%.
1,50,000,
1.5
One lakh
lakhs,
fifty
whichever is
thousand,
lower,
whichever is
higher, yeah,
higher.
whichever is
whichever
higher.
is
Whichever is
higher,
higher.
and then
For
more than
balance
3 lakh,
60%.
60% of
60 percentage.
excess in 3 lakh. Correct. So this you'll have to assess, and you must remember that this will have to specify under clause 21 subclause C if at all they give question on interest or salary or remuneration paid to partner. So salary, remuneration, commission, it doesn't matter whatever name they give, that will be assessed under this only. That is for first 3 lakh we'll have to allow for 90% or 1.5 lakh whichever is higher, and for next 3 lakh, after 3 lakhs we'll have to allow 60% of amount in excess of 3 lakh. Above this, whatever salary or remuneration you give to partner, that will be disallowed. Above this is the allowable limit. This is the allowable limit. Above this, whatever amount you give to partner, that will be disallowed. Then come to very important clause, clause 21D. So 40 capital A3, 40 capital A3, very famous famous section. So what does 40 capital A3 says? Anyone please fast. 40 capital A3.
A related party transaction.
No, that is 40 capital A2. 40
Sir,
capital A3 deals
has
with
been
In
cash
excess
discussed
of
expenditure
about
which has
it.
been,
10,000.
yeah,
Um,
cash expenditure being disallowed in excess of 10,000 per day per person. Per day per person. Similarly, if you are paying for goods, vehicle or transportation, then that is the limit will be not 10,000 but the limit will be
35,000.
35,000. Correct? So disallowance or deemed income, disallowances or deemed income under section 40 capital A3. Why this is called deemed income? Disallowance means what? Whatever deduction that you might have taken in profit and loss account, that won't be allowed to you. But deemed income is in the case of 40 capital A 3A. 40 capital A 3A is just another subsection of 40 capital A which deals with what? Suppose in financial year, previous year 2022, 2023, you took expense of 40,000. You took expense of 40,000 which you took on accrual basis, right? And then in previous year 23-24, you paid this 40,000 per day per month to a single person in cash. So this was allowed to you since this is an expense which is not covered under section 43B. I told you yesterday about section 43B, which is the expenses which is allowable only on payment basis. But this expense is not covered under section 43B and hence will be allowed to you on accrual basis. So you took deduction of 40k in previous year 22-23. However, in previous year 23-24, this you paid in cash, which should be now disallowed under section 40 capital A3. But since you have already taken it in the previous year, this will be added back in your income. This will be added back in your income of previous year 23-24. Getting this? And this addition is done under section 40 capital A 3A. You have to specifically bifurcate between section 40 capital A 3 and 40 capital A 3A because institute ask on these two sections, and you will have to be very specific about the subclauses, very specific about the subclauses, because see here in subclause A, you are specifying about 40 capital A3, and in subclause B you are specifying about 40 capital A 3A, and institute have asked this under section 40 capital A 3A. You will have to specify clause 21 subclause D and then B. This question was asked by ICI in MCQ. You will find this in our MCQ booklet as well. So expense which was taken by you in the previous year 22-23 or any of the above previous year but being paid in cash in the subsequent years, so that will be charged to your income tax, charged to your income as a deemed income under section 40 capital A 3A, and that will be reported under the clause number 21DB, 21DB, and section 40 capital A3, that will be reported under 21DA. So these two you have to remember because this is an important section, 40 capital A 3, 40 capital A 3A. and also the language and reporting format. Just quickly see this once, language and reporting format. So on the basis of examination of the books of account, you have to report what? All based on documents, evidences. So expenditure covered under section 40 capital A3 read with rule 6 double D. So do you remember this rule 6 double D? To quickly give a glimpse about this talks about exception to section 40 capital A3. So in case you are paying in cash, even if you are paying in cash, if this expense is covered in rule 6 double D, if this expense is covered in rule 6 double D, then this cash expense will be allowed. And what all expenses are covered in rule 6 double D is kind of like expenses where it is not feasible to pay via bank. For example, salary payment to a person who is being onboarded on a ship for more than 15 days. Similarly, payment to a farmer, payment to a fisherman. So farmer or fisherman might not have a bank account, but if they directly give you that payment being made to a person because the person insisted that he doesn't have a bank account, then this person is not a farmer or fisherman, and unless clarified, you will disallow this expense because this is not allowed under rule 6 double D. So all these kind of expenses which wherein feasibility would not be possible for a person to pay via bank only, then that expenses will be allowed even if paid in cash, even if paid in cash. So again, I'll tell you what 40 capital A3, just remember the limits. The limits is 10,000 or 35,000 in case of goods vehicle business. If you are paying to the person which is engaged in goods vehicle business, if you are paying to the person who is engaged in goods vehicle business, that is transportation of goods, transportation of goods, so then the limit will be 35,000 and not 10,000. Exception is covered under rule 6 double D. Rule 6 double D exceptions covered. And then 40 capital A 3A deals with what? 40 capital A 3A dealt with expense which was allowed to you in previous year, allowed expenses in subsequent year paid in cash. So whichever year you pay, then in that previous year, this expense will be considered as your deemed income. Whatever expense you took earlier, then that will be considered as your deemed income. Clear? So you'll have to report what? Serial number, date of payment, nature of payment, amount, and name and PAN of the payee if available. Whenever you feel kind of a bit confused that what this table format is, or sort of how do I get to retain this table format, then what you can do is just take an example from your side. Date, serial number 1, date of payment, whatever you take, 22 May 2023. Nature of payment, suppose you can take is what? Transportation expenses to Jai Ma Durga travelers. Similarly, amount you can take 55,000. Name you can take Durga travelers, and PAN of the proprietor. Kind of you will tend to retain the format as well, table format. Clear?
Yeah.
Yes, sir.
Next, quickly come to provision on payment of gratuity, which is not allowable under section 40 capital A7. So this deals with what? Provision on gratuity. Whatever provisioning you make, this provisioning is not allowed because gratuity is kind of expense which is allowed to you only on payment basis under section 40 capital A7. Something that is what I recall, but you may have to visit section 40 capital A7 or may not. That is not that much important for tax audit reporting. And similarly, any sum paid by the assessee as an employer which is not allowed under section 40 capital A9. This was, I think, provisions. I don't remember. Fine. These two are not that important. But yeah, 21D, 21D, sorry, 21 and that too 21 ABCD. Yeah, 21D is very, very important. It deals with what? 40 capital A 3. So 21D deals with what? Again, you can summarize this 40 capital A 3. So that will be 21D A and 40 capital A 3A. That will be what? 21D B. Any confusion in this? Let me know now only. I can repeat again. Very much clear? Now again, very important section. This attempt also the question come from this clause. Amount of deduction which is not allowed to you in terms of section 14A. What does section 14A says? Section 14A says expenditure that you have incurred in relation to any income which is exempt income. So if the income is exempt, then how will they allow you the expense with respect to that income? Getting this? If suppose my agricultural income from agricultural land, income, whatever income you generate from an agricultural land, is it exempt? Yes. Income from agricultural land is exempt. Now, expenses that you are incurring on that agricultural land or whatever expenses that you incur to generate this income, that will also not be allowed to you as a part of deduction under income tax act. So if they give you any question with respect to this, then you will have to report under clause 21H. 21H, or you can directly in this cases also you can specify clause 21 if not sub clauses. 21H, amount of deduction which is not allowed to you in terms of section 14A, which deals with what? Which relates to on those income which is not forming part of your total income, that is which is exempt income. Expenses which with respect to exempt income is not allowed to you under section 14A. And then lastly, amount inadmissible under provision to section 36(1)(3). This was with respect to, I don't remember. This section 36(1)(3) deals with what? Whatever interest you paid on your borrowed capital, that will be allowed as expense. Interest paid on borrowed capital is allowed as an expense. But provision to section 36(1)(3) says what? Whatever interest that you paid on your borrowed capital, and that capital which you have borrowed is used for acquisition of an asset, and therefore that borrowed capital is capitalized. Do you remember borrowing cost AS 16 or your Ind AS 23? No, Ind AS. What was the Ind AS for borrowing cost? Ind AS for borrowing cost. Yes, anyone?
36.
What?
36.
36 was for impairment.
Then 38 too.
38 का
23.
intangible asset था ना. Sorry, what?
23.
23 only. Yeah, I was right. ठीक है 23 था. हाँ. So Ind AS 23 or whatever AS 16, then borrowing cost, what we used to do, capital, we would capitalize that expense in the cost of acquisition of our asset, right? Similarly, the same concept applies in ICDS also. Do you remember what was the ICDS yesterday? ICDS 1 was with respect to accounting policy, ICDS 1 with respect to valuation of inventory, ICDS 3 was AS7, AS7 contracts, ICDS 4 was
Contract
revenue recognition,
revenue
I,
recognition.
ICDS 5 was PPE, ICDS 6 was effects of foreign currency exchange, and ICDS 7 was investments or securities, and sorry, ICDS 2 was AS12, and then ICDS 8 was AS13, and ICDS 9 was your borrowing cost. Correct? So ICDS 9 was your borrowing cost. That also allows you to do what? Capitalize your expense. Capitalize your borrowed capital to cost of acquisition. That is, you can capitalize that borrowed capital if you have used it for cost of acquisition. Similarly, you can capitalize the interest on that borrowed capital also. Interest on that borrowed capital, you can capitalize that in the cost of acquisition of your asset. So that interest which has been allowed to you to be capitalized in the cost of acquisition of an asset, that will be allowed to you as a form of depreciation in the subsequent years, and therefore this interest is not allowed during the previous year. Since this interest you have capitalized it, that will be allowed as a depreciation in your future years. Therefore, this will not be allowed to you in the previous year. This is disallowed under provision to 36(1)(3). So you can just write here what? Interest on borrowed capital. Interest on borrowed capital which is capitalized in cost of acquisition of an asset is disallowed. So I told you what in clause 21 we'll be learning all the disallowances. Let's quickly come to questions. So answer me फटाफट से. Dhanlakshmi, assessee has incurred payments to clubs. Dhanlakshmi, assessee incurred payment to clubs. Payment to clubs, whether is it allowable expense?
It is a personal expenses, so that this is not allowed.
So will be not allowed to you, but has to be reported by tax auditor under which clause number?
21A.
21A.
A.
Right. Similarly, firm engaged in the business of plying of goods carriage had paid rupees 15,000 in cash to Mr. Y. Whether this will be allowed, Tanvir?
Yes, sir. This is allowed.
Just see the question, Sagar. Whether this
No,
will be
sir.
allowed?
It has exceeded the limit of 10,000, sir.
Exceeding the limit of 10,000. Any other view?
Yes.
Nikita, Arnab?
It is paid to transporter, no?
Transporter. So 35,000 is allowed.
No, sir, it is paid
Up
by
to
the transporter,
35,000.
not the individual.
Are we paying to transporter or we only
No,
ourselves is are transporters?
we are the transporter and we are
So
paying
we
to
are the
non.
transporters.
We are the transporters. We are not paying. Sorry, we
We
are
are
paying. We are not paying to the transporters, right? So for us, the limit will be what? 10,000 only. Do not get confused. 4 marks, entire 4 marks will be wiped off. Clear? Payment of rupees 15,000 in cash to Mr. R on 10th September towards settlement of invoices for expenses accounted in financial year 17-18. Tell me the clause number.
3A, sir. 40.
40 capital A 3A section, correct? And then clause
Disallowed, sir.
21 D
B.
B, correct? 21 D B. Paid cash 90,000, but for separate bills of 9,000 each. 10 bills were there of 9,000 each, and we paid cash of 90,000. 10 bills for 10 bills. Do we see invoice wise or bill wise? No. We see person and day wise. Single
Person.
person, single day. Single person, single day. If you are paying it to single person, single day, that will be disallowed, irrespective of the different invoices that for which you are making the payment. Clear? Then cash payments were made since the other parties insisted upon the same and did not have a bank account. What is there? What are they saying? That we don't have a bank account, so please make payment to us in cash. Is this the expense which is covered under Rule 6DD? No, I told you those are the specific expenses which are covered in Rule 6DD. Cash payment of 6 invoices of 5,000 each made to Mr. X who is engaged in leasing of goods carriage. Whether this will be allowed?
Yes, sir.
This will be allowed because this amounts to how much? 30,000, which is within the limit of
30,000.
35,
35,000.
35,000 limit. Yeah, clear. So I have clearly mentioned here the clause number as well. So do remember to accordingly learn the same because in one of the MCQ ICI has asked. Clear? That is why I have focused a lot in this section. Now come to clause 22. Clause 22. Amount of interest which is not admissible to you under section 23 of MSMED Act 2006. So this interest which is not allowed under section 23 of MSMED Act. MSMED Act says what? MSMED Act section 23 says that suppose I am taking an example of Larsen and Toubro L&T only. We used to work and I found that there are so many customers or there are so many suppliers like MSME which fall under MSME, micro, small and medium enterprises, small industries. They are also the suppliers to large companies such as L&T. Now, do you think L&T can easily manipulate these MSMEs? Can they clearly dominate these MSMEs? They will not make payment. They will not do their responsibility, fulfill their responsibility, right? So in that case, what does section 23 of MSME says that if within 45 days or 15 days, I don't clearly remember, but if within these days you don't pay the amount, your due amount, if you do not pay, then after that 3x interest will be applied. 3x interest you will have to pay to these MSMEs. तिगुना लगान, have you watched लगान movie? दोगुना लगान लगेगा.
Yes, sir.
यहाँ पे तिगुना लगान लगता है. Interest 3x interest you will have to pay to the supplier, to the MSMEs, right? And then this interest what you are paying now, this won't be allowed as well under income tax. This interest also will not be allowed to you under the head PGBP. So that is what they are saying. Amount of interest which is not admissible to you under section 23 of MSMED Act 2006. Getting this? So section 23 of the MSME Act lays down that interest payable or paid by the buyer in accordance with the provisions of this act shall not for the purpose of the computation of income under income tax act be allowed as a deduction. So they clearly say that this interest would also not be allowed under income tax act. Therefore, we have to cross check the disclosures made in the financial statement whether this interest relates to the interest paid to our customers or interest paid to our suppliers who fall under the category of MSMEs. And these MSMEs have to be separately disclosed under Ind AS also. If you remember, in AS there is a separate disclosure requirement for payment made to MSMEs separately. Now come to clause 23, which what Dhanlakshmi was saying, which deals with what? Section 40 capital A 2. That is payment to related person. Payment made to related person or payment made to person which are specified under 40 capital A 2B. So this is a long list. If you remember, this list covers almost like all the related persons which you can think of. And if you are making the payment to this person in excess of fair value which you should have paid him, then that expenses are disallowed under income tax act. But are we here to report all these expenses to assessing officer, or are we here to disallow the same? What are we supposed to do under tax audit report? Are we supposed to report these expenses to the income tax officer, or are we supposed to disallow the same?
So we have to report to the income tax officer.
So we have to
Reporting.
report to the assessing officer. You if at all, let's say in exam they give you question like 40,000 you paid your salary to your brother, but your brother was worth only 10k. So in a day, suppose you paid a payment of 40k into 30, and this is coming out to be 12 lakh suppose. So 12 lakh salary you made, but that was supposed to be only 1 lakh or whatever be it. So this difference in fair value versus actual payment, they give you the bifurcation. You will disclose what here? You will disclose this 12 lakh and let the assessing officer decide whether this is in excess of fair value or not. You will not disclose the excess amount. You will disclose the full amount which you are paying it to your related person. Clear? So you specify what? Serial number, name of person, then relationship with the assessee. Relationship with the assessee could be what? Let's say it's the director of the company. He's the director of the company, so director is also covered under 40 capital A 2. Amount you have paid is suppose say 3 CR. Account head is salary. You paid salary to a director. Nature of expenditure you will specify. It is what? Remuneration. Voucher number you will specify, and date of payment. All this you will specify and let the AO decide whether this expense is in excess of fair value or not. So read this, you'll understand what I was saying. Provides that expenditure for which payment has been or is to be made to certain specified person in the opinion of the AO. In the opinion of the AO, mark this. Such expenditure is excessive or unreasonable. So you have to see what? Whether this is in excess in the opinion of AO and not your opinion. Nobody is asking your opinion. So Nikita, quickly tell me, Mr. Y exported diamonds to firm in USA which is owned by his brother. Amount rupees 2 lakh. Mr. Y or you, suppose you are exporting diamonds to a firm in USA which is owned by your brother. So reporting under which clause, Nikita?
I guess it's just in form of a kind and no amount is
No. You are exporting and you will get rupees 2 lakhs. Don't worry. It is not in kind. His brother, but they are all money minded.
okay if exported to it will be reported under clause 23 then because related party.
Clause 23, what we just learned, right? Just read the question once again and clause 23 once again. Everyone, what should be the answer? Nikita, read once again. Yes.
Maybe not required to report because clause 23 talks about expenditures and this,
Come
if
again,
they're
come again.
exported
You're not required to report because?
because clause 23 is about expenditures
Correct.
incurred.
So clause 23 talks about expenditure, expense which you pay to related persons specified under section 40 capital A2. Is this an expense or this is the revenue? You're exporting goods. You are receiving from your brother. Is this a payment or a kind of revenue? Right? So this is not required to be reported under clause 23. Important question. Can commit a mistake in exam. Everyone clear or any doubt? Yes, Deva.
Yes, sir. I'm clear.
Then quickly tell me second question, Deva. Paid rent to his brother
Because,
2 lakh and paid interest to his sister 4 lakhs.
yeah, sir. But it need to be reported and so
Has to
same
be
clause
now reported under clause 23.
because it is an expense paid to related parties.
Clear?
Yes,
Now
sir.
clause 24. Clause 24 I told you yesterday also. All the expenses which we took in clause 19. Remember? 33AB, 33ABA, 32AC, 32AD. All these expenses. I told you some conditions. For example, 8 years you will have to keep this asset with you. You will not have to sell this asset. You will have to use the money which you have deposited in NABARD or which you have deposited in SBI for that purpose only. If you fail to fulfill any of these conditions, the expense which has been allowed to you will be deemed to be income under the head PGBP, and this will have to be reported under clause 24. Clear? So these three clauses are very, very important. We'll quickly try to learn these three clauses at least. So clause 22, just one more thing. So 2222 means you can learn this like 2 means you, 2 means you. So तू मेरे को पेमेंट नहीं करेगा क्या? In English, what we can say is तू you will not make payment to me. तू you will not make payment to me. So two means two you will not make payment to me. That you will have to kind of remember this by clause 22. two. ठीक है? तू मेरे को पेमेंट नहीं करेगा, इंटरेस्ट पेमेंट करना पड़ेगा फिर तेरे को. अगर तू मेरे को पेमेंट नहीं करेगा, तिगुना लगान पेमेंट करना पड़ेगा. Similarly, clause 23, you can learn like this, that I have at least like kind of 2-3 brothers and sisters, or 2-3 relatives. 2-3 relatives are there which are kind of pain in the, or kind of 2-3 relatives which are always behind you, pulling you down, sort of kind of like that, right? Clause 23, 2-3 relatives are always there, right? And then 24 you will learn that 24 is my birthday, so you'll have to learn 24 anyway, because I am saying on 24 it's my birthday, so you'll have to relate that on 24th on my birthday income is deemed income under section 32 AC, AD, 33 AB, ABA, AC. 22 23 24 22 23 24 24. Anyone else whose birthday is on 24th? So my birthday is on 24th. You'll have to remember this clause specifically. Amount which is deemed under section 32 AC, AD, 33 AB, ABA, and 33 AC. And also remember my birthday. Right? So only because section 32 AC, these three clauses we have learned. Now let's see, only because section 32 AC subsection 2 provides for chargeability of deemed income under the head PGBP in addition to taxability of capital gains, auditor is not required to report any capital gains or losses arising on transfer of the said asset. What does it say? That suppose what I was saying was, whatever expense you took on capitalization of that asset, suppose you capitalize this asset under section 33 AB, tea, coffee, rubber, one plant you established, and you took this entire expense under the head PGBP of suppose 1 crore plant. 1 crore plant, you took this as an expense, and within 8 years you cannot sell this plant in next 8 years, remember. Now within 8 years you sell this asset for 1.5 cr suppose. Then how much amount you debited in profit and loss account, how much amount you took as deduction under the head PGBP? 1 or 1.5?
1, sir.
1, right? So 1 CR you took as a deduction. So this will be deemed to be your income under the head PGBP, and any amount in excess of this 1 crore will be deemed to be your income under the head capital gains. So sort of kind of these sections they are trying to report. So they are saying that you need not report any capital gains here. You need to report what? The auditor is not required to report any capital gains or losses arising on transfer of the said asset. The tax auditor will be required to verify the compliance of the conditions of the provisions of section 32 AC and report the claim of deduction accordingly. So 32 AC was investment allowance, which is no more a valid section. So need not worry about this 32 AC. But yeah, 32 AD is still there. 32 AC or 32 AD was with respect to investment allowance, which is not relevant now. And 33 AB, ABA, AC is there, of course. Clear? So whatever conditions they are saying that the amount which you took as deduction, that only you will have to report. You need not report any capital gains or capital losses. Clear? Whatever amount you are charging as again income under this clause 24, you will have to report that. Now clause 25, any amount of profit chargeable to tax under section 41 and computation thereof. So do you remember section 41 of Income Tax Act? So that deals with what? Income which is again deemed income. So deemed income was like kind of the famous example you can take is of bad debts. If you incurred any bad debts, then this is allowed under section 36. So you took this bad debts as deduction under section 36 in the year in which bad debts happened. Now subsequently after 2-3 years he got some senses and he paid to you. So whatever bad debts recovery you made, that amount will be deemed to your income under the head under section 41. So that is what you have to report: serial number, name of the person, amount of income, section, description of transaction, and computation if any, whatever adjustment you will make. So that is clause 25. Clause 26 I told you yesterday. Quickly tell me the answer, Krupali. If suppose in previous year 22-23, in previous year 22-23, I paid bonus to an employee, or the interest on borrowed capital I paid to a bank, or did not pay, sorry, it's actually accrued, of rupees 20 lakhs, and I paid this on 30th April 2024. In which year this expense will be allowed to me, Krupali? Not audible, just unmute.
It's paid before the return filing, before due date, so it will be allowed in the previous year itself.
What is the due date for return of income for previous year 22-23? If suppose tax audit is applicable,
September.
it's 31st October 2023. 30th September is for filing of tax audit report.
Tax audit report.
So 31st October, October of what? Which year?
2023.
And when are you paying?
Okay, it's 24.
Right.
Yes.
So this will be allowed in which year?
In the year in which payment is made, that is
2024,
24-25.
2024, 2025. Everyone got this? Please do not get confused again. Yesterday also I told you that after due date of payment, whenever you pay, in that year only the expense will be allowed to you under section 43B. So remember 4-5 expenses, which is bonus to employee, interest on borrowed capital, railway wagons. Whenever you are making payment to railways for railway wagons, and then your um, employer's contribution to provident fund, right? Indirect taxes, all the indirect taxes that you make payment. So if you want to write, you can also write here all the state whether sales tax, custom duty, excise duty, or any other indirect tax levy, says imposed, etc. is passed through profit and loss account. This is what I was saying yesterday also. Pass through means inclusive method of accounting. That is, you are passing it through profit and loss account. Passing through in profit and loss account, that means what? If you are showing sales not as 100 but showing it as 100, and expense as not 50 but showing it as 59, and then taking GST expense as 9 rupees. So this GST expense is passed through profit and loss account. And since it is passed through profit and loss account, you have to specifically check whether GST has been paid or not. GST if paid, then only this expense will be allowed to you, else it won't be allowed. Clear? So if you want to write, you can write 43B, few of the expenses. You can also refer Income Tax Act, but interest, then bonus to employee, employer contribution to PF, not employee. Clear? And then payment to railways, and indirect taxes. 2-3 more are there. So the expense which was incurred, yes, Kripali, come again. Kripali, the expense which was incurred in previous year 2022
Yes.
2023 So for tax audit report of 2022-2023 or tax audit report of AY 23-24, PY 22-23 or tax audit report of AY 23-24, where will I report this expense which is not allowed to me? In which clause? In which sub clause of clause 26?
B.
B, right? And when I come to previous year 24-25, in which sub clause of clause 26 I'll report this?
A.
A. That is clause 26A, because this pre-existed, which is coming down, carrying forward
Pre-existed.
from the previous year, and therefore I'll report this amount as paid during the previous year. Suppose out of this 10 lakh, out of this 20 lakh, I paid 15 lakh. Out of this 20 lakh, I paid 15 lakh. Then here I'll show what paid during the previous year. I'll show as 15 lakh, and still
15.
not paid during the previous year. I'll show it as 5 lakh.
5.
Clear?
Yes.
Any doubt till here? Anyone? Arnab, Pawan,
No.
No, sir.
Pawan, you had your sleep Sunday. You came late 7:30.
Yes. From tomorrow will come.
Sunday month now. What are you all going to do on Sundays? Any plans? No plans. Krupali is shaking her head like,
सर सर ये जीएसटी वाला एक बार बता दीजिए ना, तो इन ब्रीफ जस्ट वो थोड़ा नेटवर्क.
GST is nothing but they are saying that whether this GST expense or any indirect expense, whether you are showing it in your profit and loss account or not. If you are showing this as in your profit and loss account, then you will have to do what? You'll have to see that this expense which you are charging under profit and loss, this expense is paid or not, because 43B clearly says that whatever expense which is specified under this section has to be allowed only subject to your payment basis. So you can take this expense, you can take this indirect expense only if you have paid these taxes before the due date of return of income. So for that purpose, they are saying that check whether this is passed through profit and loss account or not. If this is passed through P&L, then this expense will be allowed to you only when you have paid this before the due date of return of income, else not.
Okay, sir.
Then clause 27, quickly come to clause 27. Do you remember these old days when GST Act was made applicable, which was 1st of June 2017? What was the year?
2017, 1st July.
1st July, right? So during that period, there were many books of accounts which used to have Senvet credits, excise credits, or other credits which we used to call Senvet credits. So those credits were allowed to you to pass through GST ITC if you fill a form and give all the details about your invoices based on which you took this Senvet and then transfer this Senvet to ITC. So based on that, if you are able to transfer these Senvets to ITC during that year, then you would have reported not. But if not, if you have not transferred the Senvet credit to ITC, then this Senvet, will it be useful? No. This will be charged, this will have to be charged to profit and loss account, because this you can't take as ITC in GST. The output will be GST liability output, but Senvet you won't be able to take. So if you were able to transfer the Senvet to ITC, then good enough. But if not, then you'll have to charge it off to profit and loss account. So whatever treatment you made in your profit and loss account, that you have to report in clause 27A. It's an old clause, not much relevant now. Similarly, clause 27B, particulars of income or expenditure of prior period credited or debited to profit and loss account. This is relates to what? Prior period expenses. And this is an important clause. Just remember this clause 27 subclause B. Prior period expenses, which has not been tested by ICI till now, might get tested in a MCQ or maybe 4-mark question. Clause 27 subclause B, prior period expense. You'll have to report here based on this serial number, type, particulars, amount, prior period to which it relates, which prior period, that is financial year 18, 19, 20, 2021, whatever prior period this expense relates to, which you are taking this year, or whatever adjustment you are making this year, which relates to your prior period. Quickly tell me one question, one answer. Suppose you are following cash system of accounting and you were obtaining, suppose say CA certificate from past 3 years. You are obtaining CA certificate and all these 3 years expense you paid in this year, current year. All the 3 year expenses you paid in current year, and therefore you took expense in the current year since you are following cash system of accounting. So if you are following cash system of accounting, whether this expense which you took this year but which relates to previous year, whether this will be considered as prior paid expense or not. Important,
No,
can be
sir.
asked in exam. Yeah, Deva?
No, it won't be considered as prior period items because it is a transition period, no? With training certificate of
Transition
CA.
period? What?
Means we are converting from, it is change in accounting policy kind of thing.
Yeah, you're following the accounting policy, you are following your method of accounting, not policy, but you're following your method of accounting of cash system, cash basis. So this is not a prior expense. This is your expense for the current year only. Clear? This can be asked. Just read this. Under cash system of accounting, expense debited or income credited to profit and loss account would be current year's expense income even though they may relate to earlier years. Clear? They might give you this and they'll ask you whether this needs to be reported or not. This won't be reported under clause 27b. Getting this?
Yes, sir.
Again, this is a important question because this is given in your study mat. So I'll quickly tell you a brief about study material, how the chapter is framed in study mat. So if you open study material na, for tax audit, you'll find a lot of things. If you are getting a ton of information here, you'll get a 10 tons, at least 10 tons of information in study material. So like the information, what extra information you will get is, for example, do you remember clause 2? Do you remember clause 2 of tax audit report? Clause 2,
Address.
address, name and pen, name, pen, address. You revised yesterday, right? So you can just note it down as I remember how I learned NAPC. NAPC, what was that? NAPIS pack. So that is how I learned NAPIS pack. That is name, address, pen, any indirect access. Then status. Do you remember yesterday status? Then फिर PP, P for previous year, A for assessment year, and C for clause of 44AB. Under which clause of section 44AB you need to audit these books of account. So name, address, pen. So example, I was saying how much information is there in your study material is for these 8 clauses. They might have taken 8 or 10 pages. Why? Because for name they are giving you the procedure, how will you check the name. For address they'll give you the details, how will you check the address, how will you check whether is it tallying with the address which you told to income tax department, which you have communicated to income tax department. Do you remember? Address have to be the same as which we have reported to ITD. This I have written na, should be same as communicated to ITD. These small points you will have to remember, small points. Address should be same as which we have reported to ITD. So for that purpose, how will you check? For pen, what will you collect from the assessee? What will all documents will you collect from the assessee for pen? Similarly for indirect taxes, how will you verify? So for all this, they have given in detail. Do you remember there is a guidance note which has been issued by ICI? Guidance note. This much thick that guidance note is on tax audit. Similarly, they have issued guidance note on CARO, guidance note on peer review, quality review. So this guidance note on tax audit, they have tried to also collectively tell what all procedures the tax auditor may perform for checking each and every clause. But we cannot cover that much in detail for one chapter, right? So that is why wherever I felt important, I've included the same. For example, here tax auditor may perform following procedures for the purpose of reporting under clause 27b. That is for the purpose of clause 27b, that is prior period expenses. What procedures tax auditor can perform? So this you will have to go through. You'll have to ask the SSC to furnish a schedule indicating particulars of all the income and expenses of any prior year. Right, then verify various expenses account to see whether any expense pertaining to any earlier year has been debited to profit and loss account. You'll have to check whether any earlier expense has been debited to this current year's profit and loss account. Also see that all such items are properly disclosed or not, disclosure requirement. Check while conducting the routine audit that there is no expenditure which relates to earlier year that has not been mentioned in particulars furnished. Repeating one and only the same thing again and again. But yes, you'll have to kind of learn these points as also, because this is a study material question. This question. Study material, test your knowledge question. TYK. Till now, any doubt? Quickly go through just again whatever we have learned till now, till clause 27. Then we'll go to clause 28, 29, and 29A, 29B. These four clauses are also very, very important, which you might recall with respect to section 56 to 10. 56 to 10. Just quickly go through till clause 27 first. Chalo. So clause 28. Clause 28 deals with section 56 to 7b. Anyone recalling this section? Used to be an important section in IPCC, also in finals. Income from other sources section.
Sir, I think screen has freezed.
You can't?
There is screen, I think screen is
Okay. So section 56 to 7b. Yash Private Limited, suppose a private limited company or any public company whose shares are not public company whose shares are not substantially interested. Any company in which public is not substantially interested. That means what? It's kind of a private company only nature. Any public not substantially interested company, you can say any company which is PNSI, public not substantially interested. For these companies, if they issue shares, at the rate premium, at a premium, if they issue shares at premium, suppose to me, at premium, and whatever amount received for issuance of shares in excess of fair value, in excess of fair value. Example, face value, issue price, fair value, income under the head under section 56 to 7b. What is the income under section 56 to 7b? So face value is rupees 10, issue price is 90, fair value is 80. What do you think? Income should be under section 56 to 7B to private limited company. They are getting more than what their shares are worth. Their shares are worth only rupees 80, but since they want to, kind of manipulate the incomes. Suppose I have generated a lot of income, so I incorporated this private limited company. In a way, I'll do what? I'll transfer my income to private limited company by issuing shares at a premium, right? So whatever amount in excess of fair value, if you are issuing a private limited company, whatever in excess amount they are getting in excess of fair value, that amount will be chargeable under the head income from other sources under section 5627B. So what should be the answer here? Income chargeable is 10. Another example, face value is rupees 10, issue price is 8, fair value is 6. What should be the income under this? Income from other sources,
2
56.
rupees.
Yeah, 2 rupees. Yes, Tanvir, Mukesh, Suneshwaran, Mukesh, Suneshwaran,
No income, sir.
no income,
No income, sir.
no income. Anyone else?
Sir,
Why?
sir,
Can't do, sir.
issue price is income is 2 rupees.
We have not issued the
Because
share at
issue price.
premium. We have issued the share at discount, right? So
Sir, it
first
is
condition is what? For section 56(2)(b), 56(2)(7)(b) to apply. For it to apply, you have to issue the shares at a premium. Then only the section will itself apply. And once it applies, you have to see whether the issue price is in excess of fair value or not. If it is in excess of fair value, then whatever the excess amount will be chargeable to private limited company under the head income from other sources. Clear? That is what you have to report. Whether during the previous year the assessee has received any property being share of a company. Which capital asset? Share of a company not being a company in which public are substantially interested. That is all those companies in which public are not substantially interested. Has to be a private limited company without consideration or for inadequate consideration as referred to in section 56 to 7A. Sorry, 56 to 7A this is. Okay. By mistake I taught you clause 29. 56 to 7A. This used to deal with what? Just an opposite example where we were issuing at less than fair value. So then this person was getting benefit, right? Me, if I am issuing shares at rupees 70 but the fair value is 90, so I am getting the benefit. So this 20 rupees used to be chargeable under the head 56 to 7A, but now this has been clubbed with section 56 to 10 only. So 56 to 10 gift section. So this section is no more relevant, and therefore this clause 28 also is not relevant for you now. But whatever I taught you is regarding this clause 29. That whether during the previous year the assessee received any consideration for issue of share, for issue of shares which exceeds the fair market value of the shares as referred to in section 56 to 7B. 56 to 7B. Clear? Any doubt? 56 to 7 has been clubbed with 56 to 10. That we'll learn just below. Don't worry. So you can omit that clause because that clause is no more relevant. Clause 28. Because nothing has to be reported under clause 28 because 56 to 7A itself is omitted. It's been clubbed with 56 to 10. Clear? This example is with for clause 29. Now come to clause 29A. Do you remember amount? If I have taken amount from, suppose Mehak, I took an amount for the purchase of land. Mehak told me that this land you sell it to me, I'll give you a token money of 1 lakh. So she gave me 1 lakh, and now I told her that this property is for 1 crore, and now Mehak is telling that I won't be able to purchase this property. So I simply did what? Forfeit the Mehak's money, 1 lakh. So do you remember this income used to come under which head?
Income from other source.
Income from other sources. So but before that, 1st April 2014, as far as remember, 1st April
Yes.
2014, before this used to be subtracted from cost of acquisition. That is, whenever I'll sell this land of 1 crore anytime next year, then I'll subtract this 1 crore 1 lakh token money which I forfeited from Mac. I'll subtract this from my cost of acquisition. But what flaw did income tax identify in this? That these were actually coming under the purview of income tax only in the year of sale. If suppose I did not, if I suppose I plan to not sell the property at all, then this 1 lakh which is my income will not be taxed. So from 1st April 2014, this was chargeable under the head income from other sources. They straight away charge this under the head 56 to 9. Section 56 subsection 2 clause 9. So that is what you have to report here, whether any amount is to be included as income chargeable under that income from other sources as referred to in clause 9 of subsection 2 of clause sections 56, yes or no. If yes, then you have to specify nature or amount. Nature and amount. Any doubt? So then quickly come to clause 29b. So this is very sequential. You can learn like this. 29 is what? 56 to 7b. Then after 56 to 7, what will come? 56 to 9. So that is what? 29a. And after 56 to 9, what will come? 56 to 10. So this relates to clause 29b. Clear? For the purpose of remembering. And how do you remember that section 56 deals with clause 29? Section 56 deals with clause 29 because 5 plus 6 is equals to 2 plus 9. If you find this joke not good, then you can ignore. But you can try to learn. Yeah, Sagar is clapping. So clause 29b now. This is a very important clause. You might recall this gift section. Do you remember gift section? Whatever amount in excess of rupees 50,000 we used to receive, that will be chargeable under the head income from other sources under section 56 to 10. 56 to 10. So whether any amount is to be included as income chargeable under the head income from other sources as referred to in clause 10 of subsection 2 of section 56 to 10. So let's just quickly jump to section 56 to 10 first. What does it used to say? 56 to 10. I'll quickly summarize. If I am getting cash, if I am directly getting cash, not any capital asset, not any capital property, not any property or capital asset, I am getting cash in excess of 50,000, then this is a separate limit. This is a separate limit. Up to 50,000 I can get. If more than 50,000, then that will be chargeable under the head income from other sources. Now another thing was movable property. Movable property. Movable property again I could get for free. I could get for free. Suppose this ring I got for free from my mother. Clear? So if I am receiving it from my mother, that won't be chargeable under the head 56 to 10, under the head 56 to 10, because that is under the purview of getting it from relative. Clear? So let's suppose you are getting this capital asset for free for, I will say what, no consideration. No consideration. And one is what? Inadequate consideration. Just pay emphasis here because this is important. For no consideration, for inadequate consideration. For both of these, the limit is 50,000. Separately, you'll have to assess separately. Suppose I received a ring, gold ring, for free, worth rupees 35,000. Similarly, I received art or bullion, whatever be it, whatever capital asset which is covered under section 56 to 10. There are few capital assets which is covered under 56 to 10: art, gold, jewelry, bullion, right? Art of work, sculptures. So these all are considered to be capital asset because their value tends to appreciate, right? So I received this movable property. Not all movable properties are covered. For example, car. If I'm receiving a car, if I'm receiving a watch, that won't be covered here. Only the capital assets which are covered under section 214, as far as remember, as definition of section 214, movable property. Definition of movable property as a capital asset. So suppose I'm receiving also art and bullion which is worth rupees 1 lakh, and I am receiving it for 55,000. I am receiving it for 55,000. Do you think I need to report this, or do you think this will be chargeable to me under the head income from other sources? Just what I told you, based on the knowledge, just what I gave to you. Do you think this will be chargeable to me under the head income from other sources under section 56 to 10? Yes.
No, sir.
No? Yes or no? Krupali?
Sir,
Difference is less than 50,000. So
Difference is less than 50,000. Tanvir? Then Lakshmi?
same, sir. Difference is less than 50.
So difference is less than 50,000 here for inadequate consideration and for no consideration. This is no consideration. So I'll assess the limit separately, 50,000, which is coming under my limit. Similarly, for inadequate consideration is consideration is there, but that is not adequate, right? So for 1 lakh, I received it for 55 lakh only. This is inadequate consideration. My gift value will be 45k, but this is again less than 50,000, and again therefore won't be chargeable to head under income from other sources. Now comes immovable property. Again, no consideration, 50,000 for consideration, but inadequate consideration. Limit is what? 50,000. And how do we assess the consideration here? We compare it with stamp duty value. Compare it with stamp duty value of the land or building. Land. Clear? Any doubt here? Yeah, one more thing to clarify. For immovable property, we will assess each and individual property separately. That is 50,000 per property. The limit is 50,000 per property. But when you are considering movable property, no consideration. I am receiving ring for 35,000, and then again suppose I received a bullion for 20,000. So I'll have to club both this without any consideration, no consideration. 35 plus 20,000, it is coming out to be 55,000, and therefore 55,000 now will be chargeable under the head income from other sources. But same. If I received a land for inadequate consideration of 35,000 and another land for 20,000, both of these land won't be chargeable under the head income from other sources, because I told you what, this limit for immovable property will have to be assessed individually per property. Clear everything? Just quickly go through this. (56 to 10), where any person receives any previous year from any person or persons sum of money, that is cash, without consideration, aggregate value which is exceeding 50,000. Then immovable property without consideration, stamp duty value of which exceeds 50,000, then stamp duty value of such property will be chargeable to income. Now when you are receiving it for consideration, but that consideration is not adequate, that is insufficient consideration, then the stamp duty value of such property as exceeds the such consideration, this amount exceeding the stamp duty value minus consideration amount, will be chargeable to your income. Clear? But now comes one more thing which I told you yesterday. What was that? Bandwidth of 10%. So for inadequate consideration, and specifically for immovable property, you have to see what, suppose you received consideration of 5 lakhs, right? And you sold your land and you received a consideration of 5 lakh to me, right? So I gave to 5 lakh to you. So I bought a land from you for 5 lakh, but that land was worth rupees 5.4 lakhs. That is 5 lakh 40,000. Stamp duty value of the land was 5 lakh 40,000. Clear? So I'll have to assess what, that you got consideration of 50 lakh, I got the gift, kind of a gift of rupees 40,000 from you. Yes or no? Kind of a gift from you worth rupees 40,000. I have to assess whether this 40,000 is exceeding 10% of consideration. Whatever gift I am receiving, whether is it exceeding 10% of my consideration. What is my consideration? 5 lakhs. 10% is 50,000. Is it exceeding 50,000? No. So this 5.4 lakhs won't be reported in 56 to 10 because 56 to 10 itself won't apply. Clear? Same limit is applied where in section 50C. Do you remember yesterday? Section 50C or section 43CA. 50C is applied when it is a capital asset, and 43CA is applied same for land or building only, but when it is stock in trade. So same section apply if you are selling if you are selling a property for an amount less than stamp duty value, then stamp duty value itself will be considered as your full value of consideration for the purpose of capital gain calculation or for the purpose of calculation of PGBP under section 43CA. But however, if the amount which you have received less is less than 10% of the consideration, then you can take whatever consideration you received as your full value of consideration. You won't be required to take stamp duty value as full value of consideration. Clear? Any doubt? I hope it's clear. Consideration, you have to check that suppose this property was worth rupees 5.8 lakhs. Suppose this property was worth rupees 5.8 lakhs. Now, how much is the excess amount? 80,000. Whether this is falling within the purview of 10% of the consideration? No. And is it exceeding my 56 to 10 limit, which is 50,000? Limit of 56 to 10? Yes. So this will I'll have to report 80,000 income under tax audit report clause 29B. Clear? So quickly go through these questions. Easy questions. फटाफट से answer. Yes, line wise. Deva. Answer to first question. A private limited received 1000 shares. Face value rupees 10 of X private limited. And you received this 1000 shares at nil value. You received 1000 shares of X private limited. That is A private limited received shares of X private limited for free. Free. Fair market value is 1 lakh. Which is the clause in tax audit report that you will have to report under? Deva. Deva. Shall I sing that song? Deva, oh, Deva, Namaha. Have you listened to this song, Deva? Deva is there or not? Yes, Kripali. Quickly answer.
29A, sir.
29A.
B, sorry. B.
29B. Right? This will fall under 56 to 10 gift.
10.
Then G Private Limited received 9,000 shares. Yes, Mehak. Fair market value is 90,000 and you received it at the rate 45,000 from S Private Limited. Which clause?
45. It's less than 50,000. Oh, shit.
Fast.
Sir, no need of reporting as the difference between 90,000 and 45,000 is less than 50,000.
Correct. Then next, Sashi A Limited. A Limited is not a company which is publicly substantially interested. It is a company which is publicly not substantially interested. Issued 1 lakh shares. Face value is rupees 10 to resident Indian at the rate rupee 80 per share. Fair market value, however, is rupees 60 per share. Which clause? Mute. I think you are on mute. No, you are not on mute. Not able to hear you. Fine. Yes, Sagar.
Sir, it is in the clause
Okay.
29.
Clause 29.
29, sir. 29, sir.
Section 56 to 7B. Correct?
B. Yes, sir.
Why? Because 80 minus 60 into 1 lakh shares is coming out to be around 20 lakh shares, right? Sorry, 20 lakh rupees. Now received an advance for capital asset and the same is outstanding for 5 years. Same is outstanding for 5 years. Then Lakshmi. Same is outstanding for 5 years. These 2-3 questions are very important because these have straight away included from the write-up of SM. These are not the questions which are framed by ICI. These are the questions which are yet to be framed by ICI but can be framed and can be popped right away in the exams directly. Then Lakshmi. Received an advance for capital asset and the same is outstanding for 5 years. What do you think?
It needs to be reported.
It needs to be reported. Have you forfeited this? Any other view? Have you forfeited this amount? Forfeited or not? Mehak gave me 1 lakh for 1 crore. Now, till now, I haven't forfeited the amount. Did I tell Mehak that no, you won't be getting 1 lakh? Received an advance for capital asset and the same is outstanding for 5 years. Not forfeited, right? So here you'll see what no requirement to report such amount unless it is forfeited by an act of the SSC. If you have forfeited, then only you will have to report. Since it is outstanding, it has not yet forfeited. It is not required to be reported. Clear or not? Clear? Next question. Arnab, forfeited the amount, but you did not have the right of forfeiture as per agreement. Now what?
Sir, forfeiture is null, matlab void now from starting. So
Sir, this will be chargeable as income as per the other source. So I think this should be reported.
Think you should be reported. Yes. Others? Tanveer? Pavan?
Same
Yeah,
here, sir.
these both questions
Should be
see
reported.
same at a simultaneously. Both these questions simultaneously see assessee has not forfeited the amount, even though conditions of forfeiture is applicable. In one question, conditions of forfeiture is applicable. You should have forfeited the amount because agreement says that if within 3 months I don't receive the remaining amount, I will forfeiture the token amount. Conditions in the agreement says that, but still I have not forfeited this. And in one question, it's saying that without the right of forfeiture in the agreement, you forfeited the amount.
So as per my understanding, if this is forfeited and it is taxed under other source, then it will be reported. Otherwise, it should not be reported.
No. So that is what we have to assess now, whether this will be
No.
assessed under income from other sources or not.
Okay.
So if the forfeiture is done without the right of forfeiture and there is no action done by the other party, that means what? Even though the agreement does not specify, but you have forfeited the amount, and that is itself a kind of what you can say a deemed action or a deemed agreement. What we used to say is like, do you remember partnership by Estopel? If nothing specified, then we'll assume that you have forfeited, then this will be deemed to be your income, and so it will attract, and then accordingly tax auditors has to report this under clause 29A, and you have to in the second case look at all the facts and obtain written representation that the assessee has not yet forfeited the advance. So if the forfeiture condition is applicable but still you have not forfeited, then you have to take a written confirmation from the assessee and obtain a written confirmation that okay, you have not forfeited the amount till now, even though the amount is liable to be forfeited, but still you have not forfeited. So fine, then need not worry, because this amount, if you have forfeited not only, then how can we tax under the head income from other sources, right? 56 to 10, and therefore accordingly it will not have to be reported. These three questions is not like kind of a question actually, but this was kind of a write-up which was given in study material, and I framed this as a question. This can be asked to you. Okay, they have not yet asked in any of the platform, be it MTP, RTP or exam. Straight away can come in exam. So be wary of these all below 3 question. Clear? So amount forfeited First was what? Amount was forfeited without having the right of forfeiture. So if you have forfeited, then yes, 56 to 10 applies since you have forfeited. Income from other sources will be applied unless other party takes action, goes to court, files a case against you, and then the case runs, whatever be the result of the case. Before that, the amount which you have forfeited, therefore you will have to charge that income from other sources. But if the amount itself is not forfeited, then you will have to take written representation from the assessee that amount is not forfeited. And also, if you have received an advance but is not forfeited and is outstanding, then this is same only kind of, you will say that no requirement to report, just you have to take the written representation. There is no requirement to report under clause 29A. You will have to take what? Written representation. Clear? Then come to clause 30, which relates to section 69D, hundi. Hundi. Details of any amount that you borrowed on hundi or any amount due thereon, including interest on the amount borrowed, repaid otherwise than through account paycheck. So do you know hundi? Kind of a instrument, negotiable instrument, hundi. Till now, like in old areas, this instrument still works. So based on hundi, amount is borrowed. So I give this negotiable instrument to you and I take money from you. Then again, I'll repay the loan amount to you and you will give back the hundi. So this is a kind of financial negotiable instrument which is used. And if you are borrowing it and repaying it otherwise than through an account paycheck, details of any amount that was borrowed from you, I borrowed it and then I am repaying it to you, but not in check or account paycheck or account pay diagram. That is, I am paying it in cash. If I am repaying the amount borrowed in hundi, I am repaying it in cash, then that amount will be taxable under section 69D. 100% of the amount is taxable as far as I remember, section 69D. Then come to clause 30A, 30A, 30B, 30C. These three clauses also seems to be a kind of clause which students generally tend to ignore and leave. But give attention, not that tough. See, primary adjustment. Anyone? What do you mean by primary adjustment? Do you remember NR taxation? Chapter primary adjustment, section 92CE. So section 92C, what does it say? Suppose my entity X Limited is having an associate enterprise outside India. Having an associate enterprise outside India. Associate enterprise means kind of, you can, for simplicity, you could now assume it as a kind of related person or related party. Free. Now this associated person, I make payment to it, or I see it as expense. I show it as expense, which is more than what it should be. Why? Suppose I did what? I paid interest. And I took debt. From it and I paid interest. And I deliberately paid interest and at an excessive rate. Which is not a market rate. So why? Because X Limited here in India, interest is a tax deductible expense. And might be the associate enterprise could be in Hawaii or in Dubai, where the income tax is not at all applicable. So this interest income will be exempt. So this expense which is deductible to me and also not a chargeable income in that country is a win-win situation for me and my associate enterprise, right? So therefore, whatever expense, not, let's say, not interest but any other expense which is in excess of fair market value, then that amount has to be adjusted by AO as a primary adjustment. This will be added back in your income tax computation. Whatever excess amount you pay to your associate enterprise. And further to that, note that this primary adjustment, whatever adjustment you are making now, whatever adjustment you not, but your income tax officer, whatever adjustment he is making in your books, this suppose 50 lakh is the adjustment amount, that primary adjustment is being made by AO, then this 50 lakh you have to repatriate from the associate enterprise. Why? Because this 50 lakh was paid in excess of amount to your associate enterprise, but income tax assumes that you must have paid, instead of 60 lakh, internally you must have paid 1.1 cr. Internally you must have paid 1.1 cr only, but for the purpose of computation you are showing it as 60 lakh, and therefore we want you to repatriate this 50 lakh also as income. We are charging this 50 lakh to your income. This is your income, so this should also flow to India. This cash should also flow to India. So this primary adjustment 50 lakh has to flow back to India, and this is called secondary adjustment. And secondary adjustment is applicable when and when only if the amount exceeds rupees 1 crore. Remember this. Secondary adjustment is applicable when the amount exceeds rupees 1 crore. So come back here. Tax auditor is required to verify whether any primary adjustment is made in terms of section 92 CE subsection 1 during the previous year under consideration. The primary adjustment made may not necessarily relate to previous year under consideration. Okay, fine. That is not a important point. But what was important is whether this primary adjustment needs to be a secondary adjustment as well. That is what this primary adjustment is more than 1 cr, and if this is more than 1 cr, then that amount needs to be repatriated to be in India. That amount needs to get repatriated in India. And if not repatriated, if the amount does not get repatriated back in India, then this amount will be deemed to be as a loans or advance that you have given this entity. This amount will be deemed to be a loan or advance that you have given to your associate enterprise, and interest will be computed on this amount, and that will again be charged to your income tax. Are we clear, or shall I explain again?
Sir, 1.1 CR is expenses.
Yeah, suppose again I'll explain again. देखो एक 1.1 करोड़ is your खर्चा, ठीक है? 1.1 करोड़ is your खर्चा, but you deliberately showed as, sorry, 1 point, हाँ okay, 1.1 करोड़ is your खर्चा and you deliberately showed it as 2 cr. ठीक है? मैंने उल्टा ले लिया एग्जांपल, वो वाले एग्जांपल से बदले ये वाला एग्जांपल ले लो. डेलिबरेटली शोड एज 3 करोड़, ठीक है? सो दैट आवर अमाउंट एक्सीड्स 1 करोड़. एक 1.1 करोड़ खर्चा है, 3 करोड़ तुमने खर्चा दिखाया. हाउ मच इज द एक्सेस अमाउंट?
1.9.
1.9 cr is the excess amount, right? So income tax will assume what this 1.9 cr is not your expense. 3 करोड़ जो तुम खर्चा दिखा रहे हो, तुम्हारा 1.1 करोड़ ही खर्चा, तो 1.9 cr will be added back, and they will assume that whatever amount you transferred there will have to be repatriated back to India. Will have to be repatriated back to India. So primary adjustment is made of 1.9 cr, and since this primary adjustment is more than 1 cr, then therefore secondary adjustment will also have to be made, which relates to what? Repatriation in India. This amount has to be repatriated to India, and if not repatriated, then this 1.9 cr will deem to be treated as advance, and on this advance interest will be calculated. Clear?
Yes, sir, now clear.
So just quickly go through the points on which you have to report whether any primary adjustment to transfer pricing as referred to in 92 CE subsection 1 has been made during the previous year. You have to specify yes or no. If you specify yes, yet yes, primary adjustment was made, then you will also have to specify what? Under which clause of subsection 1 of 92C the primary adjustment was made. So there are many clauses under 92C subsection 1 under which primary adjustment made. Broadly 5 clauses were there. 5 clauses were there under which primary adjustments were made. So you have to specify under which clause you have made the primary adjustment, amount of the primary adjustment, and if the amount is more than 1 cr. If the amount is more than the 1 cr, whether the excess money available with the associate enterprise is required to be repatriated in India. Yes, it is required to be repatriated when the amount is more than 1 crore. When the amount is 1 crore, more than 1 crore, then yes, you will tick here yes, it has to be repatriated. And if yes, you are ticking yes, then whether you have to specify whether the excess money has been repatriated to India or not. And if not, I told you what, if you are not repatriated the amount, then this amount will be considered as advance given to that enterprise, and you will charge now interest on that enterprise, and this interest amount will be deemed to be your income. And that is what they are saying, that if not repatriated, if no, the amount of imputed interest income on such excess money which has not been repatriated within the prescribed time. What is the amount of computed or imputed interest income according to Income Tax Act? All this have to be reported clearly. Clear? Now clause 30b. Clause 30B, whether assessee has incurred expenditure during the previous year by way of interest or of similar nature exceeding 1 crore rupees as referred to in subsection 1 of section 94B. Again, this is an interesting section. Section 94B used to happen what? As an entity in India, I told you what interest is a tax deductible expense. Interest is a tax deductible expense. So I'll issue debt. I'll issue debt to a foreign entity, let's suppose in Dubai, and their interest, sorry, I'll issue equity there, and instead of this equity I'll get debt, debt, and on this debt I'll pay what? Interest. I'll pay what? Interest. Now this Dubai entity interest will not be chargeable to income tax, or wherever Mauritius or wherever tax haven countries, this interest will not be chargeable to income tax. Interest is tax free here, and this interest is tax deductible to me in India. Therefore, what I used to do, I used to charge interest. I used to issue debt to foreign entity, and these entities used to be kind of my entities only. And this interest, which I took debt from them, has to now be disallowed, because this is a kind of a manipulative tax practice, kind of a tax avoidance structure, which is to be avoided by income tax. And therefore, they brought what? Section 94B, and they disallowed the excess interest. Excess interest. And how do we calculate this excess interest? The amount of interest which is to be disallowed, which is to be disallowed. How do we calculate this excess interest? Excess interest equals to total interest minus 30% of EBITDA, or interest to associate enterprise for that previous year. So let's quickly take an example. You will have to calculate. Example: interest to associate enterprise is suppose 2 CR, interest to others is suppose 1 CR, and my EBITDA is suppose 5 CR. Quickly calculate the excess interest which has to be disallowed. Yes, amount. Interest to associate enterprise is 2 CR, interest to others is 1 CR, EBITDA is 5 CR. How much is the excess interest? 1.1. Okay, let's check. So total interest is 3 CR minus 30% of EBITDA. 30% of EBITDA is 5 into 30%, that is 1.5 CR. 5 into 30 कितना होता है? Right? So this comes out to 1.5 CR. Or interest to associate enterprise. How much is the interest to associate enterprise? 2 CR. So whichever is lower, the answer will be 1.5 crores. Clear? So this much amount of interest you will have to disallow. And this interest which is being disallowed by you will be carried forward for next 8 years, and will be allowed to you in next 8 year whenever you are falling within this limit. Whenever there is a room for you to allow this much excess interest amount again, then this excess interest can be allowed in next 8 years, and therefore this excess interest will be carried forward for next 8 years only. So just quickly go through the reporting requirement. If yes, please furnish the details. That is amount of expenditure by way of interest or of similar nature, that is total interest expense. What was our total interest expense here? 3 CR, right? Total interest expense of 3 CR. EBITDA during the previous year, what was our EBITDA? 5 CR. Amount in excess of expenditure by way of interest or of similar nature as per one above, which exceeds 30% of EBITDA. So what was the 30% of EBITDA? 1.5 CR. So 3 CR minus 1.5 CR will be reported under point 3. Then details of interest expenditure brought forward as per subclause 4. You will have to give all the details of the interest which you have disallowed in earlier years and are now being carried forward. And current year interest which is disallowed. Current year interest which has been disallowed, you will have to specify which is has to be brought forward. Sorry, This is brought forward and this is carried forward. Details of interest expenditure which you have carried forward as per section 94B subsection 4. That is this year expense 1.5 CR. 1.5 CR will be carried for next 8 years. Clear? Any doubt? No? Let's come to clause 30C. Whether the assessee has entered into an impermissible avoidance agreement. Do you remember GAR? General Anti-Avoidance Rules. So GAR is implemented by income tax because there used to happen three types of practice in income tax. One is called tax avoidance, one is called tax evasion, and one is called tax planning. So tax planning is allowed. Tax planning is allowed because you will plan accordingly how much tax based on the within the limits of the income tax law, and which is also ethical and without manipulating the sections. But what is tax evasion? You are not complying at all of the income tax act. And what is tax avoidance? Tax avoidance is you are complying with the tax laws, but you are actually not interpreting the spirit of the law. You are manipulating the language of the law in favor of you, thereby avoiding the tax. And for this tax avoidance, whenever they feel that they are making a kind of arrangement which is although not specifically prohibited by income tax under any of the section, but is an unethical practice and is a manipulative in nature to avoid tax, thereby income tax might charge that arrangement or charge that income generated from that arrangement to income tax and also levy a penalty or interest. So that impermissible avoidance arrangement, whether the assessee has entered into such kind of impermissible avoidance arrangement, that is what such arrangement which is not permitted by income tax. Impermissible avoidance arrangement means what? Impermissible means what? Not permitted by income tax. Avoidance means what? Avoidance means to avoid tax, and you have made such kind of arrangement. Whether the assessee has entered into an impermissible avoidance arrangement as referred to in section 96 during the previous year. If yes, then please specify the nature of impermissible avoidance arrangement, an amount of tax benefit that you are getting out of this, and you have to aggregate all the tax benefit from this amount. Are we clear till section 9 clause 30C? Section 96, impermissible avoidance agreement. So I'll quickly summarize. Clause 30A was 92 CE. Subsection 1, what, how much is the primary adjustment? Under which clause primary adjustment is made? Right? Section 92C. And whether do you require to make 92C secondary adjustment? Are you required to make secondary adjustment also? Then 30B was with respect to excess interest under section 94B. Excess interest which is not allowed to you under section 94B. And 30C was section 96, that is GAR, impermissible avoidance agreement. Remember here, aggregate of tax benefit have to be taken. Aggregate of tax benefits, because section itself takes aggregate of tax benefit. Aggregate, and have to be reported if the amount exceeds 3 crore as far as I remember according to section 96. I don't know if the limit has changed or not, but that is not given here also. So just remember accordingly. Reporting under clause 30C has kept in abeyance till 31st March 2022, but not relevant for you now because the time limit is gone. 31st March 22, we are already in May 23. Clear till clause 30C. Now quickly come to clause 31. This is the one of the biggest clause, and if we are through this clause, then we are almost through with tax audit. Just want to inquire, can we have a 1 hour session in afternoon or evening, probably by completing tax audit? If we can, we might require after clause 31, we might require 1 hour more. And clause 31 is very important. 2 mark MCQ came in my attempt and is also very tricky. Everyone, can we have a 1 hour session in afternoon or evening?
Yes, sir.
Everyone, anyone has any problem? Clear? Okay, I'll let you know the timings. We'll have this session till 9:30 now. So let's try to complete clause 31 before that. Okay, so clause 31 deals with loans or deposits that you have accepted during the year. Loans or deposits that you have accepted during the year. And do you know section 269 SS? Section 269 SS, what does it specify? That in excess of 20,000 rupees, in excess of the limit specified, limit, how much is the limit specified? 20,000 rupees. In excess of the limit specified, that is in excess of the 20,000 rupees, if you are accepting loans or deposits, then that loan or deposit will be treated as income. 269 SS, that loan or deposit will be treated as income if you are accepting it by way other than by way of account pay check or account pay bank draft or electronic clearing system. If you are receiving through debt, then no problem. If you are receiving by any way other than account pay check, account pay bank draft or electronic clearing system, then that will be assessed as income under section 269 SS. So suppose I received from Mehak amount rupees 15,000. Then I received from Sagar amount rupees 3,000. And then I received from Dhanlakshmi amount rupees 8,000. All these are in cash. Which amounts do I need to report under clause 31A? All these receipts are otherwise than by way of account pay check, account pay bank draft or electronic clearing system. Which amounts need to be reported under clause 31A? Yes.
Sir, here it is each loan, na? So
Sir, it
nothing.
is from per person.
Yeah.
So
So will
aggregate
not be
amount
It
only
reported.
will not be reported, sir.
will not be reported. How will it not be reported? Is it exceeding the specified limit 20,000 or not?
Sir, but it is from each person, na?
Particulars of each loan or deposit in an amount exceeding the limit specified in section 269 taken or accepted during the previous year. What does it say? You can read this section also just beside this. 269 SS. No person shall take or accept from any other person any loan deposit otherwise than by way of an account pay check or account pay bank draft if amount of such loan deposit or aggregate on the date of such taking loan or deposit any loan deposit taken or accepted earlier is remaining unpaid, the aggregate amount remaining unpaid or the aggregate amount referred to in clause A together with the amount or the aggregate amount referred to in clause B. So this entire amount won't be reported. Yes or no? When will I report this now? If I receive another 8k, suppose from Mehak, now how much will I report?
Entire
15,
amount will be reported.
15k or 8k? 15k or 8k?
Aggregate amount 50 plus 8, 23 will be reported.
Where was it given? There was a clarification that I remember is included. Yeah, here. So if the total of all loans deposits from a person is more than 20,000, ठीक है? Mehak here is satisfying that if the total of all the loans or deposits from a person is more than 20,000 but each individual item is less than 20,000. Clear? Still reporting required in respect of all such entries starting from the entry when the balance reaches 20,000 or more. So which amount will I report? 8,000 only. Getting this or not? Again read this. When will I start reporting? Starting from the entry when the balance reaches 20,000 or more. When did the balance reach 20,000 or more? When she pay again gave me loan of 8,000. So I'll start there. I'll start from there. Reporting will start from 8,000 until the balance goes down below 20,000. Clear? Yes, they were clear or not?
Sir, I have a doubt, sir, whether 8,000 or 3,000 when exceeding that 20,000.
15,000 won't be reported. You will report this 8,000 that you have received in cash. 3,000, what you are saying? 3,000?
I think these together will be 23,000. So excess of 20,000 will be reported.
Yeah,
So
excess of 20,000 has to be reported starting from when? Starting from the entry when your total of loan or deposit from each person exceeds 20,000. Na? If suppose you are paying me 15,000 only, then I need to report this amount?
no.
No. So when do I need to report your amount? If at all you give to me any amount in excess of 20,000. That is what the section 269 SS says. If you give any amount in excess of 269 SS, but suppose you are not giving me any amount in excess of 20,000, instead you are giving me in amounts which are token amount of less than 20,000, that is token size is less than 20,000, in order to avoid this 269 SS. So I'll start reporting when your balance reaches more than 20,000. Need not report this 15k because this is anyway allowable. This is anyway allowed by income tax.
Sir, in this first example, the whole amount was aggregate amount was exceeding 20,000, no, from each person. Means aggregate amount of each person.
Yeah,
Then it is not
this
reportable.
need not be required to be reported because we have to see person wise. That is, are we receiving 20 in excess of 20,000 from each person?
Okay, sir.
अर्नब समझा क्या?
Yes, sir. Actually, I thought, sir, excess of 20,000 means 15,000 is now, and second installment 8K. So altogether 23,000. So 3,000 extra will be
Yeah,
reported.
but that is what they are
Yeah,
saying,
yeah.
that if individual item is less than 20,000, still reporting is required starting from the entry when the balance reaches 20,000 or more.
Yeah, yeah. Now, yeah.
So you have to report accordingly. What all things you have to report? Just remember that name, address, pen. Name, address, pen of Arnab. Amount of loan or amount of deposit I have taken. That is, how much will I report? 8k. Amount of loan or deposit taken or accepted. How much will I report? 8,000. Whether the loan or deposit was squared off during the year. Whether the loan was squared off, I will report that yes or no. Maximum amount outstanding was how much? 23,000. I'll report this. Maximum amount outstanding was 23,000. Maybe during the year I have repaid 2,000. So still 21,000 is left, but maximum amount outstanding during the year I will have to report. Whether the loan or deposit was taken or accepted by check or bank draft or use of electronic clearing system through bank account, I'll report it as no because I received it from you by way of cash. And in case the loan or deposit was taken or accepted by way of check or bank draft, whether the check was an account pay check or not, whether the bank draft was an account pay bank draft or not, these all points have to report. Clear? Any doubt? Now quickly come to 31B. Just now I received 1 lakh from Meg, right? Do you remember? For the purchase of this property, Meg gave me 1 lakh token amount. This 1 lakh, we call it as specified sum. Specified sum. So specified sum is nothing but money receivable or advance or otherwise in respect of the transfer of an immovable property, whether or not the transfer takes place. So it doesn't matter transfer takes place or not, whatever advance or otherwise whatever money I have with respect to immovable property, that will be called a specified sum. And if this specified sum is exceeding the limit specified under section 269 SS, how much is the limit? 20,000. If this amount specified sum exceeds 1 lakh, is exceeding 20,000, yes. If this out of this 1 lakh I am receiving 50,000, even if 50,000 by way of cash, then I'll have to report here accordingly. Clear? However, 31A and 31B need not be given in the case of a government company, in the case of a banking company, or in the case of a corporation established by central, state, or provincial government. That is what in the case of if you are a government company or banking company, so of course they will be receiving a lot of deposits. They'll be receiving a lot of loans or deposits in cash exceeding 20,000. Similarly, for government company, this clause will not apply, and for a corporation established by a act of parliament or by a central, state, or provincial act. Clear? Then this 31AB is not required to be reporting. This is important, yellow mark. because this is asked in RTP May 20 as far as remember. RTP May 20 MCQ it was asked as an MCQ. You'll also find it in an MCQ booklet. So 31A, 31B need not be required to be reported by government company, banking company, and corporation established by central, state, or provincial act. Clear? Okay. Now
Yes,
comes
sir.
to 31BA. 31BA is simple. Here we are seeing 269 ST. Do you know section 269 ST? The limit is 2 lakhs. The limit is 2 lakhs, and the limit applies whenever I receive amount. Whenever I receive amount by way of cash or by way of other than by way of account pay check, bank draft, or electronic clearance system in excess of rupees 2 lakh, in excess of rupees 2 lakh in a day, or or for one event or for one transaction. Suppose for in an entire transaction I received more than 2 lakh, then also 269 ST will apply. In a day I received for more than rupees 2 lakh, then also 269 ST will apply. Or for any one particular event I received more than 2 lakh, then 269 ST will apply. Just quickly, if you want to see, you can check the definition of 269 ST. 269 ST provides that no person shall receive a sum of 2 lakh or more in aggregate from a person in a day, or in respect of a single transaction, or in respect of a transaction relating to one event or occasion from a person. Clear? So the famous example of wedding generally here. So wedding example you can take that even though there could be a 4 5 events, different events, of which the amount is exceeding 2 lakh. So it doesn't relate to one event, but it could be related to a single day, or this is with respect to a single transaction. So that could be a case where 269 ST will apply even if one or two of three of this condition is not applicable. But even if one condition is applicable, that is a single day, single transaction, or a single event or occasion, then 269 ST will apply, and you have to the amount that you have received will be chargeable to income tax entirely. Clear? Under the head other sources. Now particulars of each receipt in an amount exceeding the limit specified in 269 ST in aggregate from a person in a day, or in respect of a single person or a single transaction, or in respect of a transaction relating to one event or occasion from a person during the previous year, where such receipt is otherwise than by a check or bank draft or use of electronic clearing system. That means what? Here you can simply write what? Write along with me cash. मोटा माटी कैश बोल रही है अगर if you are receiving it by cash. Same BA instead of BA in BB, what they are saying is if you are receiving it by way of check or bank draft, but it is not an account pay check or account pay bank draft, not an account pay check or bank draft. Did you get the difference in BA or BB? In BA we are not getting the check, we are not receiving the check, we are receiving directly cash. In BB we are getting the check, but that is not an account pay check, or that is not an account pay bank draft. And if at all we are receiving an account pay check or account pay bank draft, then no reporting is required. Reporting itself is not required. Clear? So reporting is to be required under BA when you are receiving it in cash, and if you are receiving it by a check or bank draft, which is like a bearer check or blank check, or by any way other than by way of account pay check or bank draft, then you have to report under BB. Similarly, just read BC and BD and tell me the difference between BA and BB. BA versus BC. Just tell me the difference between BA versus BC. BA versus BC.
31,
BA
31 BA is talking about receipt of amount and
31
31
BC.
is talking about payment of an amount.
So why do we require to report payment? Income is chargeable under whose head? Recipient or the person who is making the payment? Under 269 ST, who is getting taxed? Recipient or payee? Sorry, payee or payer? Payee na? Receipt should not happen. No person shall receive. If you receive, you will be taxed. The person paying won't be getting taxed. Getting this or not? Then why are we reporting here? सामने वाले को फंसाना है. To trap other person and to let income tax know about the such kind of payment that we have made to any other person. So we will be specifying the PAN number of that assessee. So income tax will now trace this PAN number and will now tax that recipient. Getting this? So this is with respect to not for our purpose, but for the purpose of income tax, that yes, there is one more person with whom we have made payment in excess of 2 lakh in respect of a single transaction, or in respect of a single event, or in respect of a single day in excess of rupees 2 lakh. Clear? Everyone? Similarly, here also, if you are making in cash, then it will be reported in BC, and if you are reporting in check, other than by way of account pay check or bank draft, then it will be reported in BD. If I have to summarize in a sense, I could simply say clause 31, one was BA and BB, and one was BC and BD. This deals with what? Receipt of amount, and this deals with what? Payment of the amount. BA deals with what? If you receive in cash, and BB deals with what? Check or draft, but not account pay check or bank draft, but not an account pay check or bank draft. Similarly, BC cash, BD is what? Not an account pay check or bank draft, but via check only, bearer check or any check. Clear? Are we clear? Yes. Just pay attention to the name, address, and PAN. You have to specify them, particularly in BC, BD, BA, BD, so that income tax could trace that person. Clear? Now again, important, BA, BB, BC, BD, that is 269 ST. Receipt or payment to a government company, banking company, or post office saving bank, cooperative bank, or person covered under section 269 SS. If you are making these receipts or payment, then BA, BC, BD, BB won't be required to be reported. Clear? Because this government company, banking company, post office saving bank, cooperative bank, to all these companies, 269 ST itself is not applicable. And similarly for 269 SS, since you are already penalizing him under section 269 SS, there also you are receiving in excess of 20,000, so you are getting reported under section 269 SS. So in a way, 269 ST will be a kind of double accounting, right? So that is why if you are already penalizing in under 269 SS, no need to require report under 269 ST. Clear? Government company, banking company, post office saving bank, and cooperative bank. Here cooperative bank is also included. Above it was not. Post office saving bank and cooperative bank. Here government company was there, banking company was there, and a corporation established by a central or provincial act. Clear? Now comes 269T. So particulars of each repayment of loan. Here we are making repayment of loan that we accepted. So I accepted a loan from Arnab, remember, 15,000 and 8,000. Now I am repaying it. I am repaying it back to Arnab, but I am repaying it otherwise than by way of account pay check or account pay bank draft. So however I repay, I'll have to report here. First of all, if I repay it via cash, then I'll have to report here. And if I repay it via check, but with that check is not an account pay check or account pay bank draft. If I repay it via check, okay, no, sorry. This is with respect to other thing. This you have to report of each repayment that you make, be it any way, be it by banking channel, be it by way of check, be it by way of account pay bank draft, or be it by way of cash. You'll have to report anyway. In case the repayment was made by check or bank draft, whether the same was repaid by account pay check or not. And particulars of each repayment of loan or deposit or any specified advance in an amount exceeding the limit specified in 269T received otherwise than by way of check or bank draft or use of electronic clearing system through bank account during the previous year. So okay, I got it. What was the difference? Just read 31C and 31D and tell me the difference. 31C and 31D. Yes. Chalo. We'll just quickly revise clause 31 once again. And after all the clauses, if you want, we can also revise entire tax audit. Okay. So clause 31 was simple. First clause deals with what? Clause 31A. So whenever, like, I also do what, whenever I used to revise, I just try to write down clause whatever what it deals with and everything. You can also try to revise like this. Whenever you want to revise, you can just sit with blank paper and try writing some clauses, what it deals with it, what is the reporting format and everything. Just try to, even if you want to write your own summary, you can do that as well, or even in roughly you can just simply wind up all the clauses like this. So clause 31 it deals with what? Loans and deposit accepted. Loans and deposit accepted above 20,000 rupees from each person, right? Has to be reported, name, address, PAN number, then amount of loan which is accepted during the year, then maximum amount outstanding during the year, whether the loan was squared off during the year. Yes. And lastly, how was it paid? So whether we received it by way of account pay check or account, whether we received by way of check or bank draft or electronic clearing system, and if we have received from check or bank draft, then whether the check or bank draft was account pay check or account pay bank draft or not, right? Then clause 31B was with respect to specified sum, which deals with what? Any amount that we have received and not forfeited, or with respect to immovable property, any sum of advance that we have received. And again the same kind of reporting, same sort of reporting, and the limit is also same, that is with respect to limit specified under section 269 SS only. Then this 31A and 31B was not applicable for whom? Government company, banking company and corporations established under central provision law, state act. Similarly 31BA then comes out from 269 ST. 269 ST deals with what? No person shall receive more than 2 lakh in a single day or in a single transaction, all in respect of a single event, right? If it receives, then we have to report. If he has been receiving other than by way of account clearing, account pay check or account pay bank draft, or even by check or bank draft or electronic clearing system, so that is if we are receiving it from cash, then BA. But if you are receiving it by bearer check or other than by way of account pay check or account pay bank draft, then we have to report under BB. Then BC was with respect to the payment made, right? We have to tell about the 269 ST payment made. And again, the same sort of reporting: name, address, pen, nature of transaction, amount of payment, and date of payment. And if we have paid in via check, if we have paid via check, but it is not an account pay check or account pay bank draft. Then 31, again 31 BA, BB, BC, BD, that is 269 ST was not applicable for which companies? Government company, banking company, cooperative bank. Banking company here also includes cooperative banks, which was not included above. If they give a cooperative bank above, that the reporting will happen. But here 269 XT reporting will not happen. Banking company including cooperative bank, you can remember like this, and post office saving bank also. That is all sorts of banks. And lastly, if already it is covered under section 269 SS, then again we won't penalize under section 269 ST. Then 269T. 269T deals with what? If you are repaying the loans or acceptance, loans or deposits which you have accepted, if you are repaying it other than by way of account pay check, bank draft, or electronic clearing system, then reporting will happen under clause C. It's not that other than by way of account paying check or bank draft. Anyway you pay, you have to report here. That is by way of check or bank draft, if you have paid or not. And if by check or bank draft, you will also report whether the check or bank draft was account pay check or account pay bank draft or not, right? So if you are, suppose you are paying it by cash, then you will simply here report what? No. Whether the repayment was made by check or bank draft or use of electronic clearing system, then simply it would be, answer would be no. And if you are answering it is yes, then answer here would be check or bank draft, whether it is account pay check or bank draft, yes or no. Clear? Then lastly, it was with respect to 269T, with respect to the payment which has been received by us. So we are again, we want income tax to trace the person who is making the payment to us. Payments received. Mark this word important, received. So also I have highlighted in red also. So received otherwise than by way of check or bank draft, and received otherwise than by way of account pay check or account pay bank draft. So this was more or less with respect to clause 31 A, B, and then BA, BB, BC, BD, and then 31 C, D, and E. And this C, D, E also, there is an exception that C, D, E will not be required to be reported in case of when you have taken or accepted from the government or government company, banking company, or corporation established by central, state, or provincial. That is, you are repaying to them. You have accepted from them and now you are repaying. So 269T reporting, that is 31C, D, and E reporting will not be required for you to make. Clear? Now let's move to clause 32, right? So clause 32 deals with what? Brought forward losses or depreciation allowance. You must be aware about brought forward losses. For all other, like for every type of loss, there are certain specific limits specified. Like for speculative loss, you can carry forward for 4 years. For business loss, you can carry forward for 8 years. Capital gain, same 8 years. Unabsorbed losses, business loss can be carried forward for unlimited years. House property loss, 8 years, right? So details of all the brought forward loss and other depreciation allowance in the following manner. This depreciation allowance is nothing but your unabsorbed depreciation. That is your unabsorbed business loss because of depreciation, before charging depreciation. So unabsorbed depreciation to the extent available. So you have to give all the details which you are aware about. Assessment year to which this loss relates to. So assessment year to which this loss relates to may be 2017-18. Nature of the loss and allowance you have to give this here is speculative loss. Suppose amount as returned. Returned means amount as returned. Returned means nothing. The loss which you took in your return of income. Whatever loss you took in your return of income. Return means in the return of income, what was the loss being shown? And suppose the assessing order, after assessment order, the loss was something else. Then I have put a star mark here that if the assessed depreciation is less and no appeal pending, then you can take assessed. Else you will always take what? Loss as per return of income. If it is less or there is no appeal pending, then you can also take as assessed whatever the depreciation is being shown under the assessment order, right? And then all allowances not allowed under section 115 BAA BAC BAD. You know, I told you earlier also 115 BAA BAC BAD. I told you earlier, remember clause 8A. 8A. What was this section relating to? With respect to With respect to what? Lower taxation rates. With
And
respect
no
to lower taxation
deductions.
rates, you can apply for these taxation rates provided you are not taking certain allowances, you are not taking certain depreciations or business losses or allowances. So in that case, all losses or allowances which has not been allowed under these sections, you have to report this, and amounts as adjusted withdrawal of additional depreciation on account of opting under section BAC BAD. So if you opt for 115 BAC and BAD, then you are not being allowed additional depreciation. Then in that case, you have to report under this column and then amount as assessed, giving reference to the all the relevant orders. So assessment, whatever amount that is being assessed as business loss or your depreciation or unabsorbed depreciation, whatever is being assessed, you will write here, and whatever you showed in your return of income, you will write here. Return of income in column number 4, and second last column you will show whatever was the assessment order and in which the business loss was, what was passed as the assessment order. Clear? This was with respect to 32A. Then 32B. 32B deals with in the case of company only. Okay, first of all, this is in the case of company only. In case, do you know, suppose AY 2018-19, there was a loss. There was a loss of 2.5 lakh, and the shareholding was suppose, and the shareholding was suppose, and the shareholding was suppose Yash had, this is suppose a private limited company, Yash had 20%, and you all had suppose, or let's say for example Sagar had 40%, Mehak had another 40%. Correct? Now this was as on 31st March 2018. This was the proportion of shareholding, and the loss was 2.5 lakh, which we carried forward. Now during the year AY 23-24, the shareholding changed. That is, in the year in this year shareholding changed, and now I am having shareholding of again similar 20%, but instead of Mehak and Sagar, now Sashi and Suneshwar are the shareholder of 40%, 40%. 40% each of shareholding is between Sashi and Suneshwar. So if at all there is a change in shareholding of greater than or equal to 51%, if there is a change in shareholding of greater than or equal to 51%, then this loss which was carried forward will not be allowed to you to set off in the year in which change took place. This is what this section tells you. This is what this section 79 tells you. Let's just read this. Whether a change in shareholding of a company, we are not talking about partnership firm, their PSR changing or anything about that, nothing as such. In the case of a company, in the previous year, due to which there is a change in shareholding has taken place in the previous year, due to which the losses incurred prior to the previous year, this loss which was incurred prior to the this current previous year, cannot be allowed to be carried forward in terms of section 79. So that is what section 79 says, that if there is a change in shareholding for greater than or equal to 51% as compared to the loss, as compared to the year in which loss occurred, then that loss will not be allowed for you to set off, and then you have to report under clause 32B. Clear? So you can read section 79 here also in the case of company which is not a publicly substantially interested company. That means again what? Here it should be what? Private limited company only. Yash, Mehak, Sagar. Right? If shareholding changed in previous year, then no loss incurred in any year prior to the previous year shall be carried forward and set off. That is, loss cannot be carried forward and set off against the income of the current previous year unless the last day of that previous year, that is this last day of this previous year, and on the last day of the previous year in which loss incurred, the shares of the company carrying not less than 51% of the voting power were beneficially held by the same persons. That is 51% से ज़्यादा shareholding नहीं होनी चाहिए. It should not happen more than 51%. Change should not happen be more than 51%. Clear? You can read this again. It's a bit technical, but that means exactly that only what I taught you. Change in shareholding should not happen for more than 51%. If we go language by language, word by word, then we could directly link this to, suppose, set off against the income of the previous year. So what is this saying? In any year prior to the previous year, no loss incurred in any year prior to the previous year. That means this loss deals with what? AY 18-19 loss 2.5 lakh. No loss incurred in any year prior to the previous year shall be carried forward and set off against the income of the current previous year. This previous year. This year it shall not be carried forward and set off unless means it can be set off if on the last day of that previous year and on the last day of the previous year in which the loss was incurred. That means what? On the last day of the current previous year, that means 31st March 2023, and on the last day of the previous year in which loss incurred, that is 31st March 2018, the shareholding should not be changed by more than 51%. Clear? That is what section 30 clause 32b deals with. 32a was with respect to loss or unabsorbed depreciation, right? Depreciation allowances or business losses which is being carried forward has to be reported under this manner. That is nature of loss, amount as you have returned, that is in your return of income what you have shown, whether any losses were disallowed because of the because of the lower taxation sections. And since 115 BAC BAD specifically disallow you to take additional depreciation, when then whether you have also disallowed additional depreciation. Similarly, what was the amount which was assessed in your assessment order, loss assessed in your assessment order, and any remarks. Similarly, 32b you have to specify whether there is any change in shareholding because of which you are not allowed to take any losses. Now, C point deals with assessee has incurred any speculation loss referred to in section 73. So, as you know, I told you just recently what speculation loss can be carried forward for 4 years, and this can be set off against only speculation income and not normal business income. You might be aware about this. Speculation loss can be set off against only speculation income for next 4 years. So, you have to specify about this in clause C, and clause D deals with what? 35AD. Clause D deals with what? 35AD income. So assessee has incurred any loss referred to in section 73A. 73A deals with what? 35AD. Do you know 35AD? Section 35AD deals with what? Specified business. Hotel, hospital, the limits were there. This much beds should be there. Hospital 3-star or more, and other pertaining sections like pipelines. Many were the businesses which are specified businesses, and these losses can also be adjusted only against businesses which are specified business only. So specified business loss can be set off against only specified business income, and the specified business loss can be carried forward for unlimited years, if I am not wrong, right? Specified business loss and unabsorbed depreciation, these two are the losses which can be carried forward for unlimited years, right? And then lastly, 32E. 32E deals with what? If you are, again, in the case of company only, in the case of a company, if you are incurring any speculative income, that is what, please state whether the company is deemed to be carrying on a speculation business as referred to in explanation to section 73. And what does explanation to section 73 tells you? It tells you that if you are a company, you should be engaged in trading of your goods and services, right? But if apart from your this trading of goods or your financial services, whatever other income that might be showing in your P&L, then that be deemed to be a speculative income. This is what it says. See, provides that where any part of the business of a company consists in the purchase and sale of shares of other companies, that is, you are doing what? You are investing and selling the shares of a company. Such a company.
Sir, can't hear
Sir,
you.
The audio is not
Audio.
audible.
Yeah, I was telling that suppose you are a company which is engaged in what? Yeah, can you hear me now?
Yes, sir.
Yeah. So I was telling that suppose you are a company which is engaged in iron and steel trading. Now you are also investing and selling the shares of another company. So that will be deemed to be a speculation business. And that is what it is saying, that explanation to section 73 provides that any part of the business of a company consists in purchasing and selling of shares of other companies, then for the purpose of this section, it shall be deemed to be carrying on a speculation business to the extent with which business consists of the purchase and sale of such shares However, it will not be considered a speculation business if you are already engaged in income from house property or capital gains, already engaged in this investment and selling of securities. See here, exception to explanation. Exception to explanation to section 73, I have written it as exception, although there was a proviso to explanation to section 73. There is a section 73, then there is explanation to section 73 which specifies when will it be called speculation business, and then there is a proviso to explanation to section 73. So this proviso states that company whose GTI already consists mainly of income which is chargeable under the head interest on security, that means you are already dealing with sale and purchase of securities, your business is that. And similarly, income from house property, capital gains, income from other sources, the banking company's business is same, that only, and then granting of loans and advances. Clear? So this you have to report 32E. Getting this or not? 32A, B, C, D, E. Once again, let's just revise. 32A was with respect to business loss depreciation. 32B was with respect to, yes,
Changing shareholding.
32B was with respect to section 79, change in shareholding, right? 79 was there, no? Yeah, 79. Then 32C was with respect to
Speculation loss incurred during.
speculation. D was 35 AD, and E was then your section 73 explanation to section 73, that is again deemed to be a speculation business. Clear? I will try something or the other to make or somewhat a trick for learning this, but till then you'll have to revise multiple times, then only it will help you. Clear? Chalo. Then clause 33 deals with nothing but suppose you are taking any deduction under chapter 6A, then it will be disclosed under clause 33. How can you link chapter 6A with clause 33? ठीक है? So any deduction, suppose you are taking any donation, so donation will be disallowed, right? Donation is not allowed as an expense, but here you will show under section 80G we are donating, section under which, so section under which you will specify here 80G, an amount admissible as per provision of income tax act. Suppose you donated 1 lakh, but 50% is the limit, so 50,000 will be allowed to you under income tax act, that you have to specify here. Clear? Then come to clause 34. 34 clause is also very famous. Almost all the entities you will tend to fill this clause, because see, many of the clauses you will might feed what not applicable, but few of these clauses 33, 34, 32 always it's like not applicable only. And then of course 31, clause 31 is also very important. Clause 34, again what are we dealing here with is TDS and TCS. So clause 34 plus subclause A. Yeah, so 34A, it deals with what? Whether the assessee is required to deduct tax on tax deducted on source, that is TDS, chapter 17B or chapter 17BB, which deals with what? Tax collected on source, TCS. So whether assessee is liable to deduct TDS or liable to collect TCS. If yes, you have to furnish all these details. So let's take an example and fill up this column so that we tend to retain these columns. Okay. So first is your TAN number. You'll fill your TAN number, you know, you will get a separate registration. You have to separately register yourself in the traces to get your TAN and to deduct TDS of your deductee. Then section under which this TDS deduction is being done. Suppose it is done for annual maintenance charges. Again, last example only AMC. So we will deduct TDS under section 194C since it's of a contractual nature. 194C. Nature of payment you will specify here annual maintenance charges. Total amount of payment or receipt of the nature specified in column. So what is the limit for 194C TDS limit? 1 lakh or 30,000, right? 30,000 per transaction or 1 lakh in total in aggregate in a year, correct? So here you don't have to see whether it is crossing the limit or not, whether you paid AMC for 2,000 or whether you paid AMC for 2 lakh. In aggregate, whatever be the same kind of payment you made, aggregate of all that AMCs you have to fill here. Suppose let's say we fill it as 2 CR, 2 crore. Total payment of same nature, AMC nature, annual maintenance charges. Now out of this total amount on which tax was required to be deducted, suppose out of this 2 CR, few of the expenses which did not fulfill the limit, that is, we did not cross the limit 30,000 or 1 lakh, then out of these 2 CR, suppose 1.8 CR was the amount on which tax was liable to be deducted at the rate 1%. Clear? Till now it is clear. Now in the next column we have to fill what total amount on which tax was deducted or collected at the specified rate. Specified rate is what I told you, 194C, 1%. So out of this 1.8 CR, suppose you deducted 1%, that is at a specified rate on 1 crore only. On 1 crore you total amount on which tax was deducted at a specified rate. So you'll write here what 1 crore. Now amount of tax deducted or collected out of 6. So out of 6, 1 crore into 1%, how much? 1 lakh, right? Amount of tax deducted, TDS amount. Here it is TDS amount. Here it is expense amount. Clear? Now total amount on which tax was deducted or collected at less than specified rate. Suppose few of the expenses you deducted only at the rate 0.8%, 0.5% because of confusion or something sort of that, at less than the rate specified out of 7. So what will you write here? On the amount on which you didn't deduct at a specified rate or less than specified rate. So suppose on 50 lakhs you deducted at the rate of 0.5% and remaining 30 lakhs you didn't deduct at all. So on 30 lakhs amount you didn't deducted not only, and then here you have to specify the amount on which you deducted but at less than the rate specified, and then the amount of tax deducted, suppose 50 lakh into 0.5% will be the amount of TDS here, and lastly the amount of tax deducted or collected but not deposited to the credit of the central government out of 6 and 8. So you deducted or collected but you have not deposited or to credited to the government's account, so this will come here. Fine.
Sir, sometime there needs to be deduct at a higher percentage. If the PAN is not there, then at that case, what will
So
happen?
that they won't be reported here. It says about less than the specified rate. So specified rate itself is like 30% in the case of not having availability of pen. Then you will have to report here. Specified rate itself becomes what 30%, and you are reporting. And if you are deducting at the rate of say 1% or not deducting, then it will be reported here or here accordingly.
Okay, sir.
Fine. This is what clause 34A TDS TCS deduction collection. Then 34B deals with what? Tax deducted or tax collected, furnishing the statement. Do you remember form? What was the form for TDS normally? Salaried and non-salaried? Non-salaried?
16.
610.
16A for rent.
Form 16A was for the person who is whose
Rent.
tax is being deducted.
Mhm.
Form 26 was
24Q and 26.
24 and 26.
yeah. So 24Q was with respect to salary and 26Q was with respect to other than salary. And for TCS 27 EQ था क्या? I don't remember much now. But whatever be the statement, you have to specify now here whether the type of form, that is suppose 26Q, due date for furnishing the form, suppose for April month it will be what 31st of May, and for rest of the month it will be what 30th of next month, right? And then date of furnishing, if furnished, when did you furnish? Suppose today we are furnishing the same 20th of May, and then whether the statement of TDS or TCS contains all the information. So we'll write here that whether it contains all the information, yes or no. We'll write here, and if no, then we have to also report what all information were there which was supposed to be there but which was not reported in your statement 26Q or 24Q, whatever it is. Clear? And then lastly, whether the assessee is liable to pay interest under section 2011A and 206C. 206C deals with, I think, TCS interest, and 2011 subsection 1A deals with what? Interest on TDS. That is 1% in case of non-deduction and 1.5% in case of deduction but not paid to the government. So then here you have to again disclose your 10 amount of interest under section 201(1)(a), 206(c), which is payable but not paid as of now, and amount paid out of column 2 along with the date of payment 3. Clear? So 34th clause is also done. Then quickly come to clause 35. In the case of a trading concern, so he is not a manufacturer, he is what? Trading of goods or service. So you have to specify what opening stock, suppose 1 lakh, purchase during the year, suppose 2 lakh, sales during the year, suppose 2 lakh again. So you'll deduct sales, then you're left with closing stock of suppose 0.8 lakh. So you'll write here shortage of 0.2 lakh. Correct? Yes or no? Then manufacturing concern, similar sort of disclosure is required, giving quantitative details now of the principal items of raw material, principal items of finished goods, and principal item of all your byproducts. So you have to quantify all the raw material, finished goods, and byproducts in terms of metric tons, in terms of units, right? So not just rupees, but in terms of units. Principal items of raw material, finished goods, and byproducts. So raw materials you'll specify in metric tons, suppose whatever be your opening stock. Then purchases during the year, consumption will be subtracted, sales will be subtracted, closing stock will be subtracted, and then yield of finished products. Suppose yield is, suppose you feed into the plant 100 metric ton, then out of this metric ton 90 metric ton comes out of the plant, and then the yield will be what? 90%. Whatever is the wastage, percentage of yield you will show 90%. Shortage or excess, whatever is the normal wastage or abnormal wastage, you will show here as shortage or excess. And then similarly for finished products and byproducts as well. Clear? Then come to clause 36a. 36a. 36 is not there since 115O is itself omitted. So clause 36 is no more present now. 36a comes back directly to 36a, whether assessee has received any amount in the nature of dividend as referred to in subclause E of clause 22 of section 2. Do you remember this 222E? Section 222E used to be a famous section. Yes or no?
No, sir.
So what was this section 222E was? This was in respect of a private company. Suppose private company is advancing any payment loans or any sort of loans or payment to its related director, suppose here director, okay, or shareholders. And that shareholder who is substantially interested. What is the meaning of substantially interested? More than equal to
20%.
20%, right? So more than equal to 20% is the shareholding of this shareholder, and you are granting any loans to them, then this loan will be deemed to be a dividend which is being distributed by private company. If you are not directly distributing to him but to any relative or any other person, and this person has sorry, I think I am mistaken. This was, I think, more than equal to 10%, and this person must be having substantial interest in shareholder. And then if you are giving loan to this person, even if this person is having substantial interest in this shareholder, then again it will be treated as dividend only. Dividend, it will be treated as what? Dividend payout. And similarly to any other person who is a relative or sort of for the benefit of this person, for the benefit of this person only, then also it will be treated as dividend only. So this was sort of section 222E. Then you have to specify whether how much amount have you received it and the date of receipt, because this amount will be treated as dividend income and will be taxed accordingly. Clear? Then 37, 38, 39 I already told you. Yes, Dhanlakshmi, what was clause 37? 37, 38, 39. Do you remember from clause 4? What was clause 4? Clause 4 was, bolo bolo,
Indirect tax registration.
indirect taxes, right? So there I told you also that from this clause, fourth clause, four more clauses will inception of four more clauses. Do you remember this? From 37, 38, 39, and then clause 41. So 37 was with respect to cost audit, 38 was with respect to excise audit, 39 was with respect to service tax audit, Finance Act 1994. Clear? And then clause 41, you have to mention specifically that whether there has been any order passed other than under Income Tax Act, which deals with either VAT, service tax, GST order, whatever be it, and there is any demand or refund order, then you have to specifically mention the assessment year to which that order relates to. Assessment year, apart from that, the act under which this order passed, and the demand order number, demand order ka reference number, demand amount or refund amount, whatever be it, all this you have to specify there, right? Remember this 37, 38, 39, and clause 41. And lastly, clause 40 is also an important clause which deals with what? Turnover gross receipt ratio, gross profit turnover profit ratios. You have to mention here total turnover of the assessee, gross profit divided by total turnover, net profit divided by total turnover, stock in trade divided by total turnover, and material consumed divided by finished goods produced. So many of you might be recalling this clause if you have done tax audit. So preceding previous year also we have to give the ratios. So that used to automatically be auto-populated, right? From the past year audit report. And previous year, this current previous year, we used to feed here all the ratios: total turnover, GP by turnover, net profit by turnover, stock in trade by turnover, and material consumed by finished goods produced. Then lastly, clause 42. So have you filed SFT return? SFT, statement of financial transaction. This has to be filed by an entity if there is any payment by their creditor or debtor in excess of rupees 10 lakhs, or there are many of the sub clauses which deals with SFT that you have to file if there is any payment of more than 10 lakhs in, if you have deposited cash deposit of more than 10 lakh in a bank account, cash deposit or more than 1 crore in a current account. So there are many such sort of limits which is mentioned, and then you have to file SFT return. If not, then the notice will come from the department. So for this SFT return, this is generally being filed in 61A or 61B, form 61A or 61B. So you have to specifically mention whether the assessee is required to furnish the statement. Which statement? Statement of financial transaction, SFT, in form number 61, 61A or 61B, yes or no. And if yes, then you have to specifically mention here ITD REN number. Generally, if you have to like disclose this SFT, if you have to submit this SFT statement, then you will get one ITD REN number, Income Tax Department Report Entity Identification Number, similar to like kind of tax account number, tax deduction account number, 10, PAN. Similarly, you will get ITD REN number for SFT. That you will have to specify here the type of form, 61A, 61B, whatever be, due date for furnishing. Generally, the due date I don't recall, but it used to be 31st May as far as I remember. And then date of furnishing, when did you furnish such statement, SFT, and whether this form contains all similar to that only, 34B, clause 34B TDS, whether that 26Q, 24Q, 27EQ was furnished, whether it contains all the information which was supposed to be there, and if not, report all this information which was not correctly reported in the form. Clear? Are we clear? Can I move? Yeah. So clause 43. I just, you won't believe, but I just came up with something. How do you relate with section 286 with clause 43? Can any of you guess?
Yes, sir.
Ha,
2, uh, 3 into 2, 6, 4 into 2, 8, and 2.
means,
Section, subsection is 2 also.
come again?
Sir, 2 is the subsection, so start with 2, then multiple 2 into 4 is 8, then 2
Oh,
into 3 into 2 is 6.
okay, that is also good. He is saying that 286, so 2 into 4, this 4, and 2 into 3, this 3. So clause 43 and
And
286.
subsection is also 2.
ठीक है. This wasn't which I came up with, but it's fine. Anyway, clause 43, second last clause. These all last clauses are very, very important. Remind you, these last two clauses have recently become applicable. Not this, but this clause. So this was kept in abeyance till 31st March 2022, and clause 43 and 44 are very, very important. So I used to tell this all last 5, 6 clauses are very, very important, and this clause specifically came in December 21 also. You could go visit the recording as well. I specifically mentioned this, and again, uh, just it's not like I'm boasting, but just to remind you, whatever I'm saying which is important tends to come up. I don't know why. You can see the last revision lecture of tax audit. I immensely told that without revising tax audit revision, this topic, do not go without revision of tax audit report. That is, without revising, do not go for revision of tax audit report. And exactly revision came last to last attempt. And I also mentioned in Telegram channel. Similarly, last two clauses also I mentioned, and these last 4 5 clauses are very, very important according to me, because these have not yet come up in exam. So this can anyway come. So clause 43 and 44 just simply come here. It deals with what? CBCR reporting, country by country reporting. Do you remember this in your international taxation? It used to be a topic, country by country reporting. So what happens is, um, it's like an, if I am the Indian entity, my parent is an entity which is not in India, and there is also I'm doing a business in, suppose, let's say, Sri Lanka. And then what happens is, in Sri Lanka I cannot report. Suppose that entity knows much more in detail than me, or suppose in India only I don't have a significant presence. My parent has a good hold, but I don't. I am just kind of a head office, you can say, kind of head office. So I am not the person who is much aware about the entity. So Indian entity cannot report much. Parent entity is not willing to report, but there can be an alternate reporting entity. There can be an alternate reporting entity which can report everything, country by country, reporting all the transactions, everything that has to be reported in accordance with section 286 subsection 2. So this has to be reported either by parent, or either by the Indian entity, or if not by both, then who will report? Alternative reporting entity, which is the entity which has been designated by Indian or parent entity. So these two entities will designate. If they are not reporting, then they have to designate any alternate reporting entity which will report to income tax department in respect of section 286 subsection 2, that is deals with what? Country by country reporting, which specifically nothing is relating to your BEPS action plan 16 and few of the action plans, and OECD base erosion profits section action plan 13, which deals with tax avoidance, so that the entities do not avoid any tax by manipulating the tax laws. So this has to be reported country by country reporting, either by parent, or either by Indian entity, or either by ARE, alternative reporting entity. So that is what it is given here, whether the assessee or its parent entity or the alternate reporting entity is liable to furnish the report as referred to in subsection 2 of section 286. Yes or no? If yes, then the report has been furnished by the assessee. किसने furnish किया? Who has furnished? The assessee has furnished, or the parent entity has furnished, or alternative reporting entity has furnished. You have to specify that. Then name of your parent entity, name of your alternative reporting entity, and then date of furnishing the report. All this you have to specifically mention in your clause 43. And then we arrive at our final last clause 44, which deals with what? Expenditure of entities. Now you have to specifically get accustomed to kind of all the accounting softwares, which will also fetch you the report which deals with what expenditure that you have made to all the registered entity registered under GST Act. GST registered entity and all the expenses which you have made to non-registered GST entity. So you have to clearly bifurcate the same, and under registered also you have to clearly bifurcate with whom you have made the exempt transaction, with whom entity you have made the composition transaction, and that accordingly we'll have to specify here. See, so total amount of expenditure incurred during the year. This total amount should tally with these, and these. This is the total of these, and these only. So what are all these? Let's see. Relating to the goods or services exempt from GST. These are all the expenditures which we are disclosing, which we have made, which we have transacted with the GST registered entities. So this is the transaction which deals with what? Exempt goods. Exempt goods. Now the question will what? If it is exempt, then why it has taken GST registration? So there could be many other products also which are taxable, right? And if they are selling one exempt product to us, then we'll have to report here under entities registered under GST. Clear? And not where entities in respect of entities not registered under GST. Wherever whichever entity which is having what GST registration number, these entities will come here. And then exempt good transaction will have to report here. Composition scheme transactions will have to report here. And relating to other registered entities other than exempt and composition will have to report here. And the total will come. And similarly, expenses which are not being done with the registered entities, that is unregistered transactions. Transaction done with unregistered entities will be done here, and this plus this should match with this. That is what income tax will see. Clear? Krupali?
Yes, sir.
So we are done with our all 44 clauses. Are we comfortable or not?
Yes, sir.
Yes, sir.
Yeah, you'll have to revise, but that is the only option you'll have to sort to. Yeah, Sagar.
Sir, I think I know what you came up with clause 43 and section 286.
Kya? Sorry, come again.
You came up with the idea of clause 43 and connecting it with the section 286. I think I might know.
Okay, what I was thinking that you want to say.
Yes, sir.
Yeah, tell me.
Instead of clause 43, we can make it 143 and multiply each digit with 2.
Okay, but that was not what I was telling. What my plan was way stupid than you all. 4 plus 3 is 7. 2 plus 8 plus 6 equals to 16. Then 1 plus 6 is also 7. Let's wrap up the chapter. Last two topics. This was very important, which I also told, and this also came in November 2022 exam directly straight away. Compulsory question. Why I was telling this as important? Because this was amended an attempt before. And what was it amended with? I already told you. Do you remember in the first class? What was the amendment? Tax audit report can now be amended. When? When?
For clause 26 and for clause 21 alone, sir.
Correct. For clause 26, that is dealing with section 43B, and for clause 21, that deals with section 40 small a IA or 40 small a I. Here, what happens is you could make payment before the due date of return of income, but you could also submit tax audit report before the due date of return of income. So what will happen is after the date of filing of submission of tax audit report, you could then make the payment for this, and therefore tax audit report has to be amended because you made the payment after submission of tax audit report. Clear? So then your computation, if you will not disallow the same in your computation of income, then that will get linked to tax audit report. Your computation will not be disallowing the same. Section 40A, this disallowance, 43B disallowance won't be happening in your computation of income while filing return of income, but your tax audit report will see something else. So there will be a mismatch. and that is why tax audit report can be amended, right? So let's just see CBDT amended rule 6G to provide that audit report furnished may be revised by the person by getting revised report of audit from a chartered accountant duly signed and verified by such chartered accountant if there is a payment by such person after furnishing of the tax audit report which necessitates recalculation of disallowance under section 40 or recalculate of disallowance under section 43B. The said revised audit report has to be furnished before the end of the relevant assessment year for which the report pertains. Further, when the accounts are revised in the following circumstances, the tax auditor may have to revise tax audit report also. This was already there. This was present earlier also. And to tell you an amazing fact, ICAI did not mention this in their suggested answer. They reported this earlier answer only. Okay, so this was already there, and this was the amendment 40 and 43B. Because of this, we can amend the tax audit report. So further, when the accounts are revised in the following circumstances, the tax auditor may have to revise his tax audit report also in the case of when you are revising your books of accounts, when there is a change in law with retrospective effect, and lastly, where there is change in interpretation or law, for example, CBDT circular notification judgments, etc., or case of Supreme Court judgments anyway. So in all these cases, you could most likely be likely to amend your tax audit report. However, tax auditor has to clearly specify the reason for such amendment. Clear? And this is very easy. I have already told you format of financial statement will be how? Form 3CB wale. That means what? 3CB ones. That means all the tax audit report for which we are filing 3CB. So in that case, and we have to ensure that financial statements are prepared in accordance with adequate information which is necessary to convey a true and fair view. In 3CB, we are auditing, right? So we have to focus more whether the financial statements are prepared in accordance with something which is reciprocating what? True and fair view. And similarly, 3CA ones already there will be what? Company audits or cooperative audit under Companies Act or Cooperative Society Act or under Partnership LLP Act. So in that case, you won't be requiring any format because the format will already be specified under those acts or those statutes. So form 3CA wale information to be given in the financial statement is normally provided in the statute itself, right? So you just have to presentation and disclosure के लिए you will have to follow what? Applicable accounting standard and applicable accounting standard for income tax. This accounting standard for income tax is nothing but your ICDS. So we are done with what? Most important chapter, very important chapter, tax audit. There will be a test tomorrow or day after tomorrow. Not tomorrow, okay, fine. I'll give you some time to revise and also some time to forget and then again revise. Okay, then we'll take a test for probably professional ethics and tax audit together. We'll take a test together. Okay, we'll start with professional ethics from tomorrow. And is there anyone who is like going to office or like today also? Okay. I'll be taking from till Monday, Tuesday, and till Wednesday. Till Wednesday, I'll be taking classes till 10 p.m. 10 a.m. Fine. So 7 to 10 will be the classes, and later on I'll reduce the timing to 9:30 or 9 from Thursday onwards. Okay. So in case you want revision, we can revise tax audit, or if you want to revise yourself, let me know now only. Do you want to revise entire tax audit? Anyway, I think I'll spend some time on some tricks or mnemonics to remember the clause numbers, because I've done it for Caro clause numbers. I have done it. You will remember it specifically. For professional ethics, I've already uploaded a video, and you'll tend to remember all the clause numbers of professional ethics. I'll share it in the group, but that is in Hindi actually. So for English, I'll again repeat it in class. But for the sake of remembrance or for the sake of proactivity, you can watch that video. I'll share it in on the group today. Okay, then we'll start with professional ethics from tomorrow. I'll not be sharing the clause number tricks from tomorrow only, but we'll first cover all the clauses, schedules, both the schedules, and then we'll take up the how do we remember actually the clause number. And also meanwhile I'll work on this tax audit. Clear? So you also try to revise as many times as you can. Tax audit specifically, it is very important, and all the clauses which I told it has not yet been tested is very very important for you to cover in exams, way before exams, and also solve questions if you can. In between, I have inserted many of the questions, but if you have your own compiler or any sort of question bank, do solve them. You can take up RTP, MTP also and try to solve those questions. RTP, you will generally find a section for each chapter. So you can open RTP for past 2-3 attempts and try to solve the tax audit chapter question after you revise. Okay? If not, if you are not having any question bank or sort of compiler, we have already covered most of the questions here only, almost all the questions. Okay? So have a blastful Sunday and a wonderful lunch. भूख लग गई, तुम लोग खा के आए थे? Have you all ate?
Nice, sir.
So I'll go now. Eat. You also eat. Enjoy your Sunday by revising tax audit. And we'll meet tomorrow 7 a.m. please. ठीक है?
Sir, I have one request, sir.
Yeah.
Sir, is it possible to give 5 to 10 minutes break in between, like 9 to yeah, because otherwise the food will finish on PG. So, is it possible, sir? Because